What's up, everybody? Good evening. Good evening. Welcome back. Welcome back. Today is Sunday, April the 26th, 2026. We almost at the end of the month. We had an exciting weekend. We had an exciting evening yesterday. If y'all seen what was going on, we're gonna get into it. Who all we got in the building? What's up, Shep? What's up, AWB? What's up, Dorelli? Appreciate y'all joining. Make sure y'all hit that like button, subscribe if you're brand new. Today I feel like being a little technical because that's you see the title. You see the title of the live stream. The markets aren't random; they are coded. So I'm gonna get into that. We're gonna break it down. Yeah, man, we got some things to cover, man. The markets, they pretty much gap down. You know, we was betting on to see if it was gonna gap higher or lower, but we got a gap down in the NASDAQ. Let me come over to the NASDAQ right here. So yeah, we open up the market, gap down. I'm still bullish on the market overall to close out the month of April, but we're gonna get into it shortly. Let me get a quick roll call. I am streaming on X. I am also streaming on YouTube. So if y'all on any side of it, y'all subscribe to me on both platforms. I appreciate it. How's everybody doing though so far this evening? Did y'all see the Donald Trump massacre, the Donald Trump situation yesterday? We're going to get into it. We're definitely going to get into it. All right, let me see. All right. If y'all haven't followed me on X, y'all come over here on X. I'm also streaming on X. Going to get into some headlines. Before I do that, let's briefly look at the entire market. Let me see. Let's start with the stock market, right? Let's start with the stock market. Markets overall are bullish. We got Apple sitting at $271 per share. We got Nvidia at 208. We got Microsoft at 424. We got Amazon at 263. Y'all let me know if y'all are into stocks or looking to buy anything. If y'all want me to review anything, y'all let me know in the chat as well. We got Meta currently trading at 675. We got Tesla 376. Google close to breaking all-time high at 344. Palantir 143 at a discount. Shep, we were chatting in Discord when it happened. Yep. For sure. Excuse me, y'all. Excuse me. I'm dealing with my child. 1 second. All right, yeah. So yeah, we definitely was chatting about it in the Discord. If y'all want to join the Discord, there's a free link in the description below, right? In the chat and in the description below. If y'all want to get in the Discord, it's gonna be temporary. I only have it open for a temporary amount of time or a short period of time. What else can we look at? Let's look at the S&P 500, right? Trading at 7,100. It's continuing to break all-time highs. We got the NASDAQ trading at 27,000, going crazy, parabolic. What else we got? We got Coinbase at a discount, $199. Netflix trading at $92 per share. We got Oracle trading at $173. Berkshire Hathaway, $704,000, which is crazy. Broadcom trading at $422, breaking all-time highs. Circle Internet Group trading at $99. What else we got for y'all? Crypto market. XRP sitting at 142. We're going to get into crypto as well. Bitcoin trading at 78,000. XLM trading at 17 cents. Ethereum trading at 2,300. XDC trading at 2 pennies, almost dust. Quant, $70 per token. Hedera Hashgraph, 9 pennies. We also got DAG trading at 7 pennies. Let me see who's on X right quick. Who we got on X? How many people watching and viewing from X? Let me see right quick. X is a little funny. All right, nobody's on X just yet. It's a little funny, but I'm over here streaming. So if y'all on X, make sure y'all hit that like button, repost it for me, share the stream. Share the stream. I'm also thinking about doing TikTok as well. We might do TikTok. So let's come over to X. Let's get some news out the way. But before we do that, let's come over here, check out the headlines if y'all didn't see it over the weekend or last night. Right, it was an interesting night last night. I'm just gonna play some highlights from the event, which I got my own opinion about. But we're gonna view some highlights. You know, I don't think the markets really reacted to it, but we're going to get into the markets. We're going to definitely check it out. But if the markets were open during this event, we probably see all hell break loose in the markets. But this happened over the weekend, so let's play it right quick.
The 45th and 47th President of the United States, Donald J. Trump, and First Lady Melania Trump.
Good evening to everyone. President Trump, Madam First Lady, on behalf of the White House Correspondents Association, thank you for being here. We have a big night ahead, and we're going to get started now. So enjoy your dinner, and we'll be back. Thank you.
Down, stay down, stay down. Stay down.
Pandemonium has erupted after a security incident in which we saw Secret Service and other forms of security rush into the room after what now appear to be reports of shots being fired. What we saw was a quick rush to the stage where President Trump was sitting, and the president and his wife, Melania, were escorted off stage. And then we saw additional security come surveying the room and taking cabinet members and other top government officials out of the area.
It all happened so quickly that before we knew it, most of the head table had been whisked out of the room. And the scene took a few minutes to clear before people felt secure enough to get up and walk around.
Nobody was hurt. He and the First Lady, the cabinet, everybody's safe. He said earlier tonight that journalism is a public service because I saw all of you reporting, and that's what we do.
Right now, I'm outside of the hotel. There's a lot of law enforcement presence here. Lots of police vehicles, helicopters overhead, as blocks and blocks are blocked off, as cars cannot get anywhere near the hotel at the moment, as the Secret Service and other law enforcement are investigating what happened tonight.
A man charged a security checkpoint armed with multiple weapons, and he was taken down by some very brave members of Secret Service, and they acted very quickly. Nobody told me this was such a dangerous profession. If Marco would have told me, maybe I wouldn't have run. Maybe I would have said, I'll take a pass. No, it's a dangerous profession, but I don't view it that way. Look, I'm here to do a job. As part of the job, it is a dangerous, I can't imagine that there's any profession that's more dangerous, but I love the country and I'm very proud.
That's Teflon Don, y'all. So what y'all think that comes out of this? Do y'all think he, the
hotel? What's the
do y'all think he kind of like just more security, more police state? What's going on, man? What's going on with this? This is out of left field, right? For me, that's out of left field. Y'all let me know what y'all think about that. So that happened yesterday. Let's come over to X. And let's go through some of the hilarious things that X has discovered. I mean, about the events that took place, right? I think most people think a lot of people are leaning to some bullshit. You know, it was all set up, fake, but we're gonna go through it. Let's just scroll. This is another angle of it. Hey, them Secret Service agents don't play, do they? I need me some Secret Service agents around me. Point of view. Check this out, y'all. Point of view. If y'all ever put on a trade, y'all, right? Y'all in my community, y'all in my chat. If y'all ever put on a trade, what's up, Night Owl? If y'all ever put on a trade, you know what I'm saying, and y'all put on too much risk, y'all should know the feeling. You know what I'm saying? If you never put on a real live trade and, you know, you never done it before, you probably wouldn't know what I'm saying. But if y'all put on a live trade, you should know this feeling right here. And if you over leverage, you should know how it feels. It's a real thing. It's definitely a real thing. Shep, the media and the government are always suppressing the truth. So hard to believe anything anymore. Yep, we don't know what's real. They play games like that. I'm gonna quickly go through this and then we're gonna get to the market so I can show y'all how the markets repeat over and over again. The algorithmic, they're coded. I'm just getting through some of the weekend headlines or whatnot. Let's just scroll through it. Went through that. Let's check this out about well, I don't want to play that. They got music. Let's see. Just in, right? This was 11 hours ago. Just in, U.S. crude has made its way to Japan. The tanker Otis unloaded roughly 910,000 barrels of Texas light oil at the refinery near Tokyo through the Panama Canal, avoiding the Strait of Hormuz. So here we are over in the Western nations. We're starting to import light crude oil. Trump becomes the first U.S. president to survive 3 assassination attempts in just 21 months. I don't know what's going on. Very interesting times we living in. Let's see what else. Wells Fargo is turning the air you breathe into a nanobot surveillance prison to own your body and money. Patented smart dust will make every breath a biometric payment slave scan, which this shit sounds crazy. Like, what are we talking about here? What are we talking about? We talking about smart dust. Make every breath of biometric payment slave scan. So I don't know. They call it smart dust. They are airborne MEMS devices, microscopic sensors. So somehow Wells Fargo has a patent to this, and they do spray the skies. Look, check this out. The stock market on Monday. Just in, Iran tells mediators it will not negotiate on its nuclear program or Strait of Hormuz until the war ends. So there's no negotiation from Iran until the war ends. So I guess they continue to bomb. So the stock market is probably going to go crazy on Monday. American assassins when it's school kids to the left and Donald Trump on the right. So they pretty much saying, damn, they can't hit Trump, but when it comes to school shootings, they hitting every kid. So that's crazy. The man who predicted the 2008 crash is getting destroyed by Nvidia right now. Michael Burry bought $187 million in the Nvidia put options at the 110 strike price in Q3 2025 when the stock was around 130. Nvidia is now at 208, 90% above his strike rate. So they pretty much saying this guy probably got paid. Michael Burry's 1.1 billion put option. That's crazy, y'all. That's what I'm talking about. That's why y'all need to learn this skill right here that I teach y'all. If y'all want to learn, y'all hit the link in the description. Y'all want to get in the Discord. The link is in the description as well. But this man hits 1.1 billion in put options on Nvidia and Palantir. AI valuation overview. Insane, bro. He probably, just insane, bro. This is another angle of alleged, because I can't confirm nor deny. You know what I'm saying? I can't confirm nor deny. This is another angle of the shooter guy. Wait a minute, I got to slow it down. Did he have a gun on him? He's running. What's in his hand? I don't know. And for them to go into custody, like, this is what makes me scratch my head. If this is an attempt, he's supposed to be 6 feet under. You know what I'm saying? He's supposed to be 6 feet under. If this was an attempt, we got all these federal agents that just sit around and let him go by, right? He's supposed to be 6 feet under. Nobody shoots him. Everybody just points their gun, right? So somebody, I don't know, whatever. Of course, they got a lot of memes you missed again. Check it out for my people that, like to hold on to trade. So you get in a trade, you refuse to sell because it will bounce back. How many of y'all, I know some of y'all in my Discord, y'all refuse to sell, right? And you come back, you see it bounce back and go against you. I know y'all see that. Who we got over here on X? Make sure y'all share the live stream on X. Share the live stream. Let's see. Secret Service agents. Yeah, this is what I'm saying. Secret Service agents watching the guy walking in to shoot Trump, right? You know what I'm saying? This is how they were. I can go back and show you the video. This is how they looked at him. They just walks right in, and the Secret Service didn't do nothing about it. That's crazy. That's crazy. Let's see. U.S. government is collecting donations, right? This is breaking news as well. U.S. government is collecting donations to help pay off its $39 trillion debt, right? Donations from who? The donations to the U.S. government about this form. U.S. use this form to donate to the United States government. Accepted payment methods. They want ACH, PayPal. That's crazy, bro. The government that can print money, right? All they got to do is issue bonds. The Federal Reserve send over the cash, and they want donations for what? There's no way the American people can pay off the debt. That's insane to me. Make sure y'all hit that like button, subscribe. If you haven't subscribe. Y'all follow me on X. I'm also streaming on X. I'm trying to figure out what's going on X. How many people we got on X? Anyway, President Trump says now is the perfect time for Congress to immediately approve the FISA domestic spying program. I don't know if this is true. We're going to play the video, though. The FISA, F-I-S-A, domestic spying program for national security reasons because the military really needs it. Trump says he is willing to give up his liberties for safety, even though FISA was weaponized against him by bad people. I'm willing to give up my security for military. Let's see what this has to say. I didn't really watch this.
Surveillance tool that expires this coming week. It obviously allows the FBI to surveil potential terrorists who are overseas. And we don't know right now if this individual was radicalized by somebody like that. But do you think about the importance of having these tools to protect our country from these kinds of threats? And how will you get that message to Congress when there's a Congress right now that's skeptical about renewing those powers?
Well, Jackie, I know both sides of it because Pfizer was used against me and very, very viciously by a dirty cop. You know, we had the Comey gang, Comey and his remnants, and it was used against me. And they used it very illegally. I mean, they signed court orders that were illegal. Mm-hmm. Every one of those people should be prosecuted, frankly. It was used against me. Now, that's the bad news. The good news is that the military really needs it, and it's really needed for national security, and there's a division, but I was willing to give that up, because, again, it was used against me more than anybody else, and by bad people, by sick people also. These are sick people. Comey was terrible. He was a horrible, sick person. He had real problems. And I use the word to describe him. He was a dirty cop. It's an old-fashioned term, but he was a dirty cop, bad guy. And there were other bad guys. And they used Pfizer illegally. They used it for a purpose it wasn't supposed to be used for. Okay. On the other side, you have the military. They really need it. General Raisin Cain. Look at the success we had in Venezuela. Look at the success we're having with Iran. I mean, Iran is decimated. And we got a lot of information by using Pfizer. I think we would have been very successful regardless, but it made the job a lot safer and a lot easier. So I would say, and what I've done, and I've told people, I'm willing to give up my security for the military, because ultimately that's, to me, the highest cause is the safety of our nation.
surveillance tool.
So Trump trying to bring in a new surveillance program called FISA. They already got everything anyway, so it don't matter. Assassination attempts on Donald Trump be like. That's how they target Trump, man. They can never get to the guy. That's exactly how it is. Let's see. Look, 9 lives, right? They saying Donald Trump got 9 lives, right? He got 9 lives. So a shooter got past security and Secret Service. This is what I'm saying, right? This is what I'm saying. How the hell does a shooter get past security and Secret Service? I don't understand that. They saying this was when it was real, right? This is when he was campaigning. He really thought he was going to get his life taken. Let's see.
I will call up Carrier, the president, because I have to do it myself. I know it's not.
Y'all remember this one? Boy, they putting on a good old show. I'm telling you, this is a show, bro.
I will
This is a
call
show.
up Carrier, the president, because I have to do it myself. I know it's not.
What's up, Jay Manson? But it's definitely, to me, it's giving theater, man. I just keep my opinion, though. I keep my opinion. It's giving theater. The news, shots fired at correspondence dinner. The whole world right now. You know, this is how I am. This is just how I feel, right? I'm just like, really, I don't believe it. I'm not going for it. Let's see. Look how they do Donald Trump, man. Trump right now. You know, he has feminine products on him right now and stuff. The internet is crazy. So this is the alleged shooter, right? And y'all bear with me. We're going to get to the markets here in a minute. I'm just going over headlines. And it seems like the headlines are just theater nowadays. So I'm going to go over the headlines and then I'm going to come to the market. So y'all bear with me.
College student Cole Allen developed a prototype for a wheelchair emergency brake.
The wheelchair brakes tend to lock the wheels, but don't actually lock the chair to the ground. The idea with this is to prevent it from moving at all.
Recent Aging into the Future conference held by St. Barnabas Senior Services and the Eisner Foundation offered a test run on products that have the potential to enrich the lives of seniors. 14 different tech startups got to present to over 350 people in the hopes of getting their projects into some sort of senior health facilities. College student Cole Allen.
So that's a little of the guy's background. Does he seem like he's trying to take out the president? Where do they find these people from? Right? Where do they find these people from? I don't understand it. Crypto traders right now during church service. Dana White was at the event. This is how it is when it comes to Donald Trump. They can't hit him. He's like Neo in the Matrix. Donald Trump, after his second fake assassination attempt tonight, you know what I'm saying, or last night, his second fake attempt, he lost 2 ears. Just saying, U.S. analysts, kind of like me, believe Trump staged his assassination attempt at the White House dinner to blame Iran and resume attacks. Now that might be a little out there, but hey, this was interesting to me. Why did the shooter Cole Allen have an IDF shirt on, right? He had an Israel Defense Force shirt on. Who knows, right? I'm just here to this is what the internet is discovering. I'm just here to tell y'all, like, you know, connect the dots, right? Shots fired. Let's steal some booze. So even at the event, you know, this is why I know it was all theater, man. They had people in there recording, right? They had people but meanwhile, you know, Miss Madame or the Madame over here, somebody's wife stealing the booze. You know, she gonna have a good old time. Trump was looking a little tipsy as well. You know, Trump looked like he was sipping yesterday. There is a shooting and the head of the FBI is just hanging out. You know what I'm saying? The head of the FBI. I guess they want him to suit up and be tactical. What's up? It's an illusion. What's up? I'm just the messenger. What's up? What's up? Make sure y'all hit that like button. Make sure y'all subscribe to the channel. Also, I'm over here on X. Make sure y'all come over on X, subscribe, follow me. Right? Shout out to y'all on X. reshare, repost the live stream, right? So I can kind of boost the algorithm a little bit. Make sure y'all reshare and repost it. Let's keep going. Let's see what Alex Jones has to say, right? Alex Jones and Mr. Donald Trump used to be very good friends. Now they kind of like, I ain't gonna say enemies, but they kind of like, they don't see eye to eye no more. So let's see what he has to say.
Good morning, everyone. I have had countless people send me text messages when I woke up a few hours ago saying, what is your take on the shooting last night at the White House Correspondents' Dinner in D.C. there at the Hilton Hotel? And I woke up about 3 o'clock, went to bed early last night, and so I've had about 3 hours now to research it. So a lot of people asking, well, why didn't you comment immediately last night? Well, because I went to bed about 9 o'clock, didn't know what happened. Went to bed early last night. And then I didn't want to.
I just realized, y'all, that's almost an hour long. I'm not watching that. But I'm sure he would have some good information. That's an hour long. I'm not about to watch that though. I thought it was a little short video. Let me keep it moving. Let's see what this gentleman has to say. The Maverick approach. Y'all go give him a follow. He's always on point. Let's see what he has to say. He's like a deep dive researcher, but he has some good content. Let's see what he has to say.
So the White House Correspondents' Dinner has just been shot up, if you guys haven't heard by now. And right off the bat, it gets really, really weird. Now this is the suspect, Cole Allen, who is a teacher for a college preparatory, but if you look into his background, it gets interesting. Like for one, he gains a mechanical engineering degree from Caltech, then he gets his master's from Dominguez Hills in computer science. But can anybody tell me why? He was an intern back in 2014 at NASA at the Jet Propulsion Laboratory, which is the same place where some of those missing scientists worked at. But it gets even weirder, you guys. So this account on X by the name of Henry Martinez tweeted his name back in 2023. And how is it that it has the same name, Henry Martinez, in this published paper by NASA? But get this NASA document that was published testing Orion's fairing separation system was actually published a month after Cole started interning there. What? Now, a lot of people were questioning a ton of things like, was this real? Was this fake? Makes you wonder because CNN posted this 3 days ago. This is a real article. It says, how would an assassination attempt be staged? I mean, at this point, you guys, we have to question everything because how is this possible? This account that predicted this guy's name actually dressed up as Trump at the dinner, like verbatim. So either A, we have a time traveler on our hands or something else is afoot that we may not know yet. Okay, it's super late. I'm getting some rest. I'm gonna do a part 2 to this because there's a whole lot more that I found. So stay tuned.
What y'all think, man? What y'all think? Y'all let me know in the chat, bro. Let me know in the chat. I don't think nothing is they just playing games on our psychology, man. They playing games on our psychology. I love to see pictures like this, man. I love to see pictures like this. Trading is like building your own money printer. Once you master it, you can print for life. Neo in the Matrix, right? The markers are coded. We're gonna get into it. I'm just going through the headlines over the weekend. Y'all get a little comfortable, you know what I'm saying? Y'all can come in the chat. What's up, Alien? What's up, Jay Manson? Shout out to y'all on X, right? I wish X, I don't know. Let me see. Does X have a chat? Trying to see if X has a freaking chat. The chat over the weekend. X needs a better chat system. It's an illusion. Have you seen what's under the temple? I mean, ballroom they want to build. I'm sure there's a lot of shit under there, right? I'm sure, these some sacred lands over here in the United States. These some sacred lands. So no telling what they're sitting on top of, right? The crypto market is down. Degens with their last $200. I bet. Technocracy is coming at warped speed. Spotted in Austin airport today. So they're saying this was in Austin airport. TSA Aurora, which is in Colorado. No, I'm tripping. TSA Ahora, those are Spanish words. Digital ID, pretty much. So they're already showing you the digital IDs from the TSA in the airports. Y'all know it's coming. They say when it comes, it's game over. The entry isn't easy. The waiting is the trade, right? Y'all should understand. Y'all been with me. Y'all should understand that waiting is the trade, right? Waiting for a setup. Let me see what else. I don't have much X today. We're going, I'm going to just kind of keep it moving, but that's pretty much all the headlines that I've seen. Pretty much a lot of the Donald Trump drama, etc. So we're going to come off of X. If y'all are just joining and y'all want to join my Patreon, y'all come over here, click the link. I got some mentorship and I got lessons and courses, right, that are paid tier. So if y'all want to get into those lessons, y'all can definitely come over there and tap in. If you want to join the Discord, the link is in the YouTube description, in the chat. Y'all on X, y'all follow me on YouTube. Y'all come over to YouTube, you'll get the link to the Discord. I can't be posting the Discord link in X. That's a whole different world for me, right? You already know, nothing but bots on X, so I'm not posting no links in X that's Discord or private related. I can't do that. So that's Discord. Again, come up, subscribe to me on YouTube. I'm gonna come to TikTok here in a while. I'm gonna test streaming on TikTok as well. So let's come over here. Let's get straight to following the money, right? These markets are algorithmic. First thing I want to do is I want to come over here. I want to look at the 30-year and the 10-year treasury. We're gonna get into the markets now, right? Roll up your sleeves. Roll up your sleeves. What we got over here? Okay. Sorry. Wait. Yeah. All right. So, all right. The theme of this live stream is the markets aren't random. They're coded. Y'all that been with me, y'all have been red pilled, right? You have been red pilled. So y'all should already know, like, wait a minute. He's showing something. Y'all, if you've been with me, you see me. So, if y'all brand new to me, then just kind of sit back and listen. This is the segment of the live stream where we're going to get into technical analysis. And we're going to tie the markets together, etc. So first thing I like to do is I like to look at the 30-year and the 10-year bonds, treasury bonds. If you don't know, the bonds or the debt market, every nation is in debt, right? Every nation has to borrow money. They're indebted to the central banks. The central banks issue currency. All right, understood. Y'all should know that. I'm going to keep preaching that to y'all because that's an educational thing. We got to get informed and educated about reality, bro. Like you realize people live and die without knowing how money works, right? People have came and gone through this life in the pursuit of money and don't even know how this shit works, right? The money that we've been in pursuit for, which is the United States dollar in America or your respective country, these dollars that we've been pursuing or currencies, trying to reach our riches and whatever. People want fame too these days, but trying to get rich, and you get rich and then you lose it all, and then you don't have nothing to pass down. You don't have nothing to leave behind. It's all, we got to inform ourselves. We got to become more educated about the markets, right? So starting with the 30-year and the 10-year treasury, that's where I start my analysis, because this is going to give you insight on the interest rates and the debt market. Everything starts with debt. Let's just briefly show you how much the United States is in debt right now. And then there's also a global debt. How much is the U.S. in debt, right? The debt market. We've been borrowing money forever. As of right now, I know they got a debt clock. Let's go look at the debt clock. No, that ain't the one I like to look at. They might have a new one. Let's just type in U.S. debt clock. All right, U.S. debt clock, right? The United States is in debt, right? We should know this. Currently, we gonna break 40 trillion here, before we know it. Yeah, it just keeps going, bro. It just keeps growing. So as you can see right here, United States debt is $39 trillion. Just go ahead and round it off. We're gonna hit 40. When it hits $40 trillion, this is gonna be breaking news. People, they're gonna be headlines. U.S. debt is now $40 trillion. Well, that's because our broke ass keeps spending, right? The largest budget for the United States. Well, we're going to get in this. Let me slow down, right? We just got to break this down. I got to show y'all, and we're going to tie it into how the markets are algorithmic. U.S. debt, $39-40 trillion. Debt per citizen. So every citizen is estimated to have about $113,000 in debt. Shout out to y'all that are not in debt because y'all financially won. Y'all beat the system, right? Beating the system is owning your property, not having to pay property tax. You know what I'm saying? There's going to be some debt there, but for the most part, some people have beat the entire system. Debt per taxpayer, at least $357,000. U.S. federal spending. So this is our government. They have a problem, right? They're addicts. They are spending about $7 trillion. I don't know if that's annually, but that might be all time. I'm not sure. U.S. federal budget deficit. It's about $1.6 trillion. U.S. Treasury reserve. So they supposed to have $31 trillion in reserve, right? $31 trillion, but the debt is $40 trillion. I don't know. Refund per taxpayer, $83,000. Look at all this debt. And the average person, I guess, I don't know if it's in a lifetime, but I don't know. Like, I don't know what that means, refund for taxpayer, but it's $83,000. U.S. debt to GDP ratio. I'm not going to get into that. Largest budget item. So out of all the debt out here, right, the largest budget item is Medicare, Medicaid, right? So that's almost $2 trillion Medicare, Medicaid that we fucking paying. Y'all go to work, they taking it out there. You see a check stub, it's gonna be taken out. Social Security, which my generation, we ain't gonna see this shit. I just know we not gonna see it. This shit gonna blow up before we even get to retirement age, right? But that's about almost 1.8. Shout out to y'all that's about to get it. Yeah, that's why we got to work a little harder. My generation. Now look. Older generations, yeah, y'all worked very hard. Y'all did physical labor, but this generation has to work harder mentally in knowing, we got to have multiple resources of income coming in, right? We didn't come up in the age of happy wife, 3 kids, the dog, you know what I'm saying? One person can't take care of a whole family no more. Some of y'all experienced that. My generation, less dating, more entrepreneurship. You got to think outside the box to get to where you at, right? It just is what it is. And guess what? Trading, multiple side hustles, businesses. People work full-time jobs and got to have 3 other side hustles. I'm just saying. So Social Security, we ain't going to see that. One of the biggest spending budgets is U.S. defense. You already know that's almost $1 trillion a year, I guess. It's ticking now. Interest on the debt. So out of all the largest budgets items, the interest is about $1 trillion. So they're borrowing. Check it out. Remember, the U.S. treasuries, the government, they have to issue treasuries. This is the treasuries that they are issuing, right? And then look at the interest. Once they issue treasuries, here you go. Here goes this X amount of trillions. But guess what? This is interest added on top of it, right? Come on, man. $1 trillion out of all these items. So even y'all okay, check this out. The money that's being printed for Medicare, Medicaid, Social Security, defense, people that's going to benefit from Social Security, people that benefit from Medicaid, Medicare, it's going to get passed off to the next generation. How about that? But no, y'all don't care, right? I don't expect y'all to care. It's going to get passed on to the next generation because who's going to get caught paying this debt? Not the older generation, younger generation. So you see what I mean? How you got to think a little different. Shut. Recent generations can't afford a home. That's what I'm saying, right? My generation probably going to be the last generation that can scrape up enough energy in life to fucking buy a fucking home, right? Unless the markets come crashing down and it's a reset for real. Like if they reset the entire system for real. But as of right now, as the system is operating, no, most of my generation and I got a child. My child, I don't know what we gonna do, right? That's why I got to do everything in my capability, my possibility to make more money because our children, they're not gonna be able to own shit. They're gonna be renters, right? And then if they add a social credit system and they add these systems in place, the digital ID, younger generations that I got to think about. I'm somebody's father, right? I got to think about somebody young under me and make sure they're going to be okay, right? So y'all that are up in age, It's just a different reality now, right? We got to pay back this debt. We got to figure it out. Make sure y'all hit that like button, subscribe to the channel. What else? Make sure y'all share the video, share the live stream. Unfunded debt. What the hell is unfunded debt? And I ain't gonna spend here. This is kind of interesting too. So I'm just trying to tie it into the debt market. Unfunded debt interest. U.S. total debt. I don't even know what this shit in these categories are. So 107 trillion in unfunded debt. Wait. Million, billion. 107. Okay, 107 trillion in unfunded debt. That's more than the debt itself. I don't know. Boss Junior Trading. Yep. Coming. Guess what? He watches my YouTube channel. He gonna know for sure. U.S. total interest paid. So out of all the debt out there, we done paid back 6 trillion. Like y'all didn't see the post. The U.S. government wants donations to pay back the debt. Let me come back over here. Come on, because they got us. They really disrespecting us, right? Right, especially my generation. They really disrespecting us. It's a slap in the face. Where's that post at? I gotta find it before I come back over there and look at the debt clock. Make sure y'all hit that like button, subscribe to the channel. Let me see. Where are we at? Did I pass it? I think I passed it. But wait, y'all bear with me. I'm trying to just show you how they want us to pay back the debt. Yeah, I think I passed it. Scroll back down. Right here. All right. U.S. government is collecting donations to help pay off its 39 trillion debt. Donations from who? We already own. Listen, this is how y'all know, bro. If y'all go for this, and I know somebody out there is going to send a donation. God help them, right? But they want us to give donations from who? The rich or the elites? They should make the elites and the rich people give donations. Are they asking donations from us? That's the crazy part. That's the crazy thing. That's a crazy thing right there. Let's come back to the debt clock. So the whole purpose of me watching the interest rate market, this is the system. I mean, the bonds market, it is the system, the debt market. The debt market makes the entire system. The system will collapse without the debt. We're going to get into it. Let me see before I move on. I'm just trying to see interesting numbers, some interesting statistics. All right, money creation, right? Money creation. Future USA Treasury dollars. It's at 1.7 trillion, right? 1.7 trillion. The US M2 money supply right now is at 22 trillion. Currency and credit derivatives now. So, here we go right here. Y'all see this right here? Let's educate y'all and let's do some quizzing, right? Currency and credit derivatives now. You can see it's almost in the quadrillions. It's 894 trillion. What is the currency and credit derivatives? Can y'all inform me in the chat? Can y'all let me know in the chat? What is the currency and credit derivatives? Anybody know? What is that? What is that? Come on now, let me get some engagement. Make sure y'all hit that like button, subscribe. If you're on X, share the live stream. Share the live stream. AWB, DTCC. Okay. The DTCC. I'm trying to get something a little bit more specific, right? A little bit more, a little bit more or less out there. Everybody don't know about the DTCC. Something a little bit more basic. What am I trying to hint at? What is the currency and derivatives? What's the derivatives market? I don't know if y'all can see. Behind this currency and derivatives is ones and zeros. Do you think that's random? I don't think that's random. AWB, Forex market. Yeah, the foreign exchange market. But what else? Y'all see the ones and zeros behind this little, what I'm highlighting right here? The ones and zeros. What's the theme of my live stream? The markets aren't random. They're coded. Right? Wow. And then why does this website have ones and zeros behind currency and credit derivatives? There you go. It's an illusion. There you go, Dorelli. And there you go, AWB. It's the futures and the currency, the foreign exchange markets, the derivatives markets. And the whole point of this is watching, the whole point of me talking about this is connecting it to the financial markets, which is the futures markets that we primarily trade, right? They got crypto futures coming. They're already set in play. Commodities, oil, gas. If y'all don't know, the futures market set the price for the futures markets set the price for every market that exists. The futures markets set the price for every market that exists. That's an educational thing that most people don't be knowing. They have the futures prices, the futures markets is where smart money goes to build in algorithmic floats to control assets, right? Oil should be a different price than what it is. Gold should be higher than what it is. The dollar should be higher. Well, not the dollar, but certain commodities should be priced at different levels. XRP, Bitcoin. These things are being suppressed by the derivatives because they want control. That's why there has to be an algorithm behind price. They have to control it. Make sure y'all hit that like button, subscribe. There has to be an algorithm behind the markets, right? It's not random that you see ones and zeros. So let me zoom out right quick. Let me see what this says. Can you highlight these? No, you can't highlight them. And yeah, somebody did say credit swaps. You were right too. But a derivative or credit swap, CDS, is a credit derivative contract between two parties. Don't we trade contracts and futures? The buyer receives a payoff in an underlying financial instrument defaults. So yeah, out of everything on this chart or everything on this list, the derivatives market has the highest price because the derivatives markets make the entire system go as well. And then one more thing I wanted to look at world debt. Let's look at the world debt clock because it ain't just the United States. It's not just the United States. It's a global system that is in debt. Every one of these countries up here have a central bank that controls the entire system, right? So we got what? China. We got the United States. The United States in $40 trillion in debt. China, I remember China was a little bit lower than this, but China's debt market is coming up. 21 trillion in debt. All of this makes the entire system, right? Germany, $3 trillion in debt. Japan, 11 trillion. India, 3 trillion. UK, 4 trillion. Look at the UK keeping their debt down, right? But look at us. Like what is going on with us? Brazil, 2 trillion in debt. All these countries are controlled. All of these countries are bankrupted. So when you see this list, right, you're looking at bankrupted countries. You're looking at bankrupted countries. Is it every country in the world? No, it's the primary countries a part of the global system. Right? Mexico, Netherlands, Nigeria, Norway, Poland, Portugal, Russia, Saudi Arabia. Saudi Arabia, damn. National debt in Saudi Arabia is insane. $418 billion. And there's trillions of dollars in Saudi Arabia. And they're keeping their national debt down to 400. Somebody explain that to me. I'm uneducated when it comes to that. Jay Manson, what's up? Russia. What's Russia? Russia only has 665 billion in debt, right? They're keeping their debt down. They're doing what they have to do. GDP, gross domestic product, that's what they're bringing in, right? So it's always going to be less GDP. Spain is doing pretty good. Spain has $2 trillion in debt, but they're almost bringing in 2 trillion in domestic GDP, right? So yeah, Russia 665 billion in debt, national debt, but they're bringing in 2.6 trillion. 2.6 trillion in GDP. Somebody inform me, is Russia selling that oil? What's going on with that? Y'all let me know in the chat. Y'all reshare the live stream on X. Reshare the live stream on X. Still trying to learn X, trying to grow on X. Let me just check who all we got over here. All right, we got 10 viewers over on X. Make sure y'all share the live stream. I appreciate y'all joining. Make sure y'all subscribe. US debt. So what's the point in showing y'all all this? We come back Follow the money. So my themes are following the money, and the markets are program coded algorithmic, right? Y'all should know my themes by now. So first thing you want to do as an analyst, you want to follow and track the money. It starts with the debt market. That's why we come over here, look at the 30-year bond. We look at the 10-year bond, but we're going to start right here. After I get a glance at the 30-year, because the 30-year is a little long term. Let me pull up ChatGPT right quick, right? ChatGPT. And what I'm going to ask it just to educate y'all a little bit, because if y'all brand new to me, I'm an educational channel, right? I teach education when it comes to these markets. So if y'all want to get informed, y'all got tools in front of you that you can use. Compare the 30-year bond to the 10-year, right? Spit it out for me. When comparing the U.S. 30-year Treasury bond to the versus the U.S. 10-year Treasury bond, think of it as a long-term macro sentiment, which is the 30-year, the intermediate term economic expectations, which is the 10-year. The key differences between the 30 and the 10-year. 10-year Treasury is a benchmark for mortgage rates, corporate borrowing, risk sentiment, and economic growth expectations. So in the short term, I look at the 10-year. So that's something I can watch daily. It's more sensitive to Federal Reserve policy, inflation expectations, recession fears. Higher trading volume in the 10-year compared to the 30-year, often used for swing trades, macro trades, and equity market correlation. So if you don't know, in the futures market, you can trade derivative 10-year Treasury bonds, right? You can trade those markets. Those are tradable markets, right? The 30-year Treasury bond reflects long-term inflation, pension fund demand, sovereign confidence, structural debt concerns. It's more volatile duration-wise, larger moves from long-term inflation shifts, debt insurance or issuance concerns, foreign bond demand, etc. So that's just a quick brief. Just think of the 30 years as a long-term Treasury indicator, and the 10-year is more intermediate. You track it right now in real time. So when I come back over to the bond market, right? Come back over to the bond market. I look at the 30-year on the left, more long term, and then once I kind of get a feel for it, I come over on the 10-year. So when I'm looking at the 10-year, which is at the top, I compare it to the 10-year yield. The 10-year yield is the interest rate. So the interest rate, the yield is tethered to the dollar. So if the 10-year bond goes higher, the 10-year yield goes lower, and vice versa. When the 10-year yield goes lower, the 10-year bond goes higher. NQ pumping again. We're going to get into it, Lenny. We're going to get into it. We following the money, and then we're going to get into how this shit is algorithmic. It repeats over and over again. Even just if y'all tap in with me, y'all can see right now how this shit is algorithmic. So it's not random. For example, when the 10-year Treasury bond sells off, the Treasury bond, and the 10-year yield rallies higher, right? They're inverted. They're identical and they're inverted. They are oppositely correlated. Right, they're correlated, meaning they're same, but all they did was flip one upside down, right? So right now, the yield at the top, it rallied higher. That's why you see a retracement in the, not the yield. The 10-year bond rallied higher and the yield retraced lower. Whenever the yield retraces lower, right, the yield influences the dollar, the currency. The dollar index, which is right here. Let's go down to the daily. Whenever the yield goes down, drag this over right quick. Whenever the yield, which is right here, starts to retrace, and prices very high resistance right now. That means very choppy. When the yield starts to retrace, the dollar retraces, right? Just drop down on Friday. It dropped down just like that, or it opened on Monday. My bad. It opened currently Sunday and it sold off. So if you see the dollar selling off, is that risk on or risk off for the markets? Y'all let me know in the chat. Is that risk on or risk off for the markets? Yes, Shep Dorelli, that's risk on for the markets. So what Lenny was referencing, he's talking about NQ going higher. If the dollar's pushing down because of what? The interest rate coming, right now it's just kind of, it's kind of just consolidating. They're not like locked in step by step. Let me show you the yield. My bad, the yield right here. All right, this is the 10-year yield. You can see the clear retracement. They're not identical, but they influence each other. They kind of follow the same track almost identically. So you can see the 10-year yield retracing lower, right? That's what I'm using that trend line for. But the dollar index, the dollar index also retraces lower as the yield goes lower right here. See this? This is what I'm trying to show you. The interest rate influences the dollar, right? They can really determine what goes on in the economy by adjusting the interest rate and the influence in the dollar. That's the whole point of this. Yield, 10-year yield. The bond is doing opposite. The bond is going higher. Let me show you. I'm just trying to connect the dots for y'all. You see the bond right here. It retraces up, right? It retraces up because it's been bearish. See that? 10-year bond, 10-year yield. So if the bond goes up, the yield pulls back. And if the yield pulls back, the dollar pulls back. If the dollar pulls back, equities, risk on assets go higher, right? Like we see right here in the NASDAQ. This is the NASDAQ futures contract. Make sure y'all hit that like button. I'm showing you how the markets are coded in Algorithmic. I'm visually showing you. Y'all hit the like button. Leave a comment if y'all see this. It's not random. Let's go down to the daily. And yes, Lenny, it pulled back. It gapped down lower, and then now it's rallying higher. We're going to get technical here in a minute. Let me just kind of follow the money, and then we're going to show y'all the algorithmic price action that the market always does and repeats. Right? Make sure y'all hit that like button, subscribe. And my subscribers, if you're on YouTube, subscribe. God damn, subscribe. Let me see. So if the NASDAQ is going higher, most likely what? S&P going higher. Very, very similar. If S&P is going higher, what is oil doing? Oil sitting at $95 a barrel, consolidating real quiet right now. What is gold doing if the dollar is going lower? Gold is kind of quiet right now, right? It's kind of quiet. They took out the volume from the market. We'll study this a little bit closer here shortly. It's the weekly on gold. I'll look at it in a minute. I'm sure silver is the same. Very similar. Right? So we'll come back to these commodities here in a minute. Again, if y'all just joining, if y'all want me to, at some point in the live stream, if y'all want me to kind of go over any market that y'all want me to, we can do that. I like doing that. I like looking at stuff that I have no idea about. So if y'all want to leave a comment in the chat, we can go over whatever y'all want to go over at some point. Heck, I even pause right now and go over it. And then I'll come back to what I was doing. So if the dollar's coming lower, right, now you see stocks like Apple, right? Apple's going higher. Let's get Apple. It's starting to push up higher. That's because we got a weak dollar. We got interest rates coming down. We look at NVIDIA, right? NVIDIA just pushing higher. Go down to a daily. Look at NVIDIA breaking all-time highs. You see that? Well, it's not at the all-time high yet, but it's pushing higher. Equities going higher, stocks going higher. That's because of the currency. I showed y'all how to track the currency. I showed y'all how to follow the debt market. All you got to do is keep up with the interest rate, the 10-year yield, and the 10-year bond. It influences the dollar. Whatever the dollar does, the markets do opposite. Y'all understand? Now, sometimes when the dollar consolidates, that's the only time when the markets get real volatile and go crazy is when the dollar consolidates. So if you ever see the dollar index consolidating, then markets can go crazy like fireworks. So yeah, if the dollar's coming lower, right, let's talk about other nations, right? Let's get into the foreign exchange market, right? Because this applies to all markets. Every country is tethered to their currency. Let's look at the British pound, right? So if the dollar is coming lower, guess what currencies are doing? Because the only reason this is it's the way it is because the dollar has world reserve status. It's the world reserve currency. So that's why the markets are influenced the way they are. because of the dollar status. So if the dollar sells off, we see what? The British pound go higher. What about the euro? What about the euro? Do I got the euro? Yeah. The euro dollar, right? If the dollar sells off, the euro starts to move higher, right? That's the European currency. The euro moves higher. Pound moves higher. Dollar sells off. What about these other currencies? Let's come back to the debt clock. Let's see who else can I pull up. Let me see. Let's look up the Japanese yen. The Japanese yen. Let's look up the yen. I believe it's JPY USD. That's the currency for it. JPY USD. Make sure y'all hit that like button, subscribe. So look, now the yen in a different situation. I forgot what's going on. Oh, interest rates. If y'all want to follow interest rates, there's a website. Let me see. Let me show y'all right quick. I could teach y'all a little Forex. I'm not going to harp on it too much tonight, but let me see. Where is it at? Show more. Global rates. Let's come look at global rates. It's an illusion. They have an interest rate decision tomorrow. Do they? We're going to look at the economic calendar. So if y'all ever want to look at the interest rates, and y'all that's in my chat, I encourage, and in my Discord, if y'all want to join the Discord, click the link in the bio, in the description. But globalrates.com is where I go to. That's my go-to to keep up with the interest rates. And what you do is you come over here, click on interest rates, close the little ad, interest rates, and you're going to select central banks, right? You're going to select the central banks. Again, I just showed you, looking at this right here. What did I just tell y'all? Every nation is in debt because all these nations have central banks that's controlling them. Every one of these countries that you see on this list is bankrupted, right? How that make y'all feel that all these countries are actually bankrupted? They're beautiful places, but they're bankrupted and controlled by a central banking system, right? So when we come over to interest rates, we can see how these central banks are influencing their currencies, right? Because currency is a weapon. Y'all see that? We got to rethink. We got to re-educate. Currencies are financial weapons. They are they have many use cases. Like, oh, we can use this to pay bills, but they can also be used to tear down nations. They can also be used to influence their citizens and their economies. And what y'all think is going to happen when this shit go digital, right? When it goes completely digital, it's game over. Digital IDs, digital currency. And for my people that's in crypto, we kind of banking on enslavement, you know what I'm saying? But we capitalists, so I understand, you know what I'm saying? I'm not going to get in that debate, but we capitalists. We really banking on enslavement because these people going to get the final say because they already got us debt. They already got us bankrupted. Again, you see the digits, you see the numbers. What can we possibly do? Right? What could we possibly do? We can't do shit. We bankrupted. So, one piece of information and I'm gonna move on. When you come to look at the interest rates and you're interested in trading Forex, how do you pick your foreign exchange pairs? For my people, it ain't just about crypto. It ain't about just Forex. There's other markets that you can participate in. Foreign exchange is one of them. Same setup, same things happen in this market. In the futures market, that happens in the Forex market, that happens in the crypto market. Whatever y'all want to trade, same price action, algorithmic price action is there. But key information for people that want to get into Forex, if you want to find what pair that you trade, you simply find a country, right, with a high interest rate and a low interest rate. And all you do is pair them together. So for example, you can see the US, let's go back. The US dollar is currently at 3.75% interest rate. So if I was trading Forex, I would just take the 3.75 and I'm going to pair it with, you see how the pound is 3.75. I don't want to do that. I don't want to trade a pair with equal interest rates. I want to trade a pair that's low and high. So what I'm gonna look for is the European. So the American interest rate is 3.75. The European interest rate is 2.15%. So what do? I'll pair them and come trade the Euro USD. The Euro USD, right? So that will be the pair that you trade. So if the Euro, for example, let's do this. Let's determine a 20-day dealing range for the Euro. Let's determine a 20-day dealing range. Let's start on the current candle, right? And let's just go back 20 days, which is right here. Right there. It's not random that that's that low. 20-day dealing range. Maybe I can do a 40, but I'm going to just do 20. So in the past 20 days, what direction has the Euro been going? Y'all let me know in the chat. In the past 20 days, what has order flow been for the Euro? Come on now. Give me some participation. In the past 20 days, where has order flow been for the European currency? Buy model, Shep, buy model. It's an illusion, bullish. Dorelli, bullish flow. Jay Manson, buy side. Yes, y'all are all correct. Give me 1 second. Join the live. Yes, so y'all all are right. So for the Euro, right, I just showed you how to compare interest rates. The European interest rate was lower than the United States interest rate. So we're going to trade those pairs, right? So as the Euro goes higher, what is the dollar doing in the past 20 days? Let's take a look. This is the dollar. Let me take this off my chart. Let me clean it up a little bit. I'm going to show you what the dollar has been doing in the past 20 days, just to show you how crazy this can get. Once you see it, you can't unsee it. And then you can just trade whatever the dollar does, do the opposite. So in the past 20 days, which is right here, I'm going to show you. This swing high right here down to the swing low. That's the dollar in the past 20 days. So what has order flow been for the dollar in the past 20 days? You see the dollar going lower and the Euro going higher. I keep saying European, but it's the Euro. The Euro currency goes higher, right, as the dollar goes lower, right? Is it random that how the dollar keyed off of a gap? And I didn't see one in the Euro, but it's not random. Wherever the dollar goes, the European dollar goes opposite direction. That's how you trade Forex. That's a little secret for y'all that didn't know. You can do this for any pair, either. You can do this for any pair as well. Any pair. So again, go to rates.com, etc. But I just wanted to get into Forex a little bit. Still an interesting market. It actually is getting better. So yeah, we might dive into Forex in the future, right? We might dive into Forex, start doing foreign exchange teaching. My main pairs in Forex is the pound, the euro, and the dollar. I don't trade nothing else. The pound, the euro, the dollar. That's the trifecta. And the futures market, the NASDAQ, the NQ, the ES, and the Dow. For me, is really gold. NQ, ES, and GC, which is the gold market. Those are my primary markets. So every market I got a trifecta. In crypto is Bitcoin, XRP, and XLM, right? Or it can fluctuate. It could be Bitcoin, XRP, Ethereum, right? So you want to have like a trifecta in every market that you look at. In the metals market, gold, copper, silver. That's a trifecta, right? I don't trade oil. That's a whole nother beast. But you want to have definitely a trifecta in whatever market you look at. Make sure y'all hit that like button. Make sure y'all subscribe to the live stream. Hit that like button, subscribe to the live stream. So, all right, I got into currencies. I showed y'all how the debt influences the dollar and the dollar influences the currencies. And then we're going to just keep following the money. This is how I do it. I start from the debt, currencies, equities, which is the futures markets. And then I look at other commodities like oil, gold, silver. And I don't, those are my main markets. And then I look at crypto, of course. I look at some crypto markets. But learning this skill set, stocks, they're not my thing. But I track them, though. I still look at stocks. But when you learn this skill set right here and you specialize in a certain market, which is futures, Forex, when you specialize in these markets, you're taking opportunities every day that the average person can't do in the markets, investing, right? If you're a long-term investor, I get it. But like I said, times have changed. Like I was saying, like when we paying Medicaid and, some of y'all worked hard, the older generations, y'all worked hard. Well, my generation, kind of younger in these markets, buying stocks. I mean, we can do that because we got the skill set to do it. But my mindset is get in, get out, because you can do a lot with that, right? Get in, get out, preserve your capital. You can control the outcome. When you buy and hold for years and years, you can't control the outcome, right? You can't control the outcome. But in the short intermittent time, if you have a skill set that allows you to do so, you are in control, right? So it's a different ball game, but you have to learn the skill set. But looking at oil right now, it's $95 a barrel currently. I probably need to compare it to, let's go look at the Brent. What is the Brent crude? What is Brent crude, which is over there in the Europe? Brent futures. Brent is trading at $100 a barrel, and WTI, which is West Texas, I believe, that's crude oil in America, is trading at $95 a barrel. So they're about similar. It's a little higher over there in Europe, but oil right now, it's been very volatile. We got 3 days left in the month. Month is almost over. Let's go down to the weekly. Look at the volatility in oil. Very volatile, but it actually looks like it wants to come up. It actually looks like it wants to kind of pop higher. We shall see. Right now, to me, this is very sloppy, very high resistance. I wouldn't want to touch it, to be honest. I wouldn't want to touch it. All right, let's come back. Let's get a little bit more technical. Let me come to my future, my NQ chart, right? So this is my active chart right now. Let's get a little bit more technical. Let's do a little technical walkthrough. Let's zoom out. So if y'all ever want to learn something, here we go, right? If y'all ever want to learn something, here we go. All right, first thing I like to do is go out to the monthly time frame. This is the NASDAQ NQ. This is the market that I primarily trade daily or in weekly, right? This is the market that I specialize in. This is the market that I prefer. If you're trading NQ, you can trade micro NASDAQ contracts. You can also trade mini NASDAQ contracts. The difference is the minis cost $20 per point. The micros are $2 per point. So for y'all that think y'all can't do this, it's very affordable for people that have income coming in. I'm going to say that. Don't just think, oh, I'm going to start trading. If you got sustainable income and you can save $1,000, $500, you can definitely trade these markets. Don't let it discourage you. If you're somebody who has more equity and a little bit more buying power, you can jump after you learn the skill set. You can move to the minis, right? The minis, which are heavy hitters, right? When we talk about heavy hitters, let me pull out my calculator. A 20-point move for 100, and we were seeing 100-point moves on Friday, right? 20 points times 100. $20 for 100 points. That's $2,000. That might happen in a few minutes, right? You can make $2,000 in minutes messing with minis. So you got to know what you're doing, though. We got to know what you're doing. So when I come to the chart, right? When I come to the chart, I like to start with the monthly time frame. It is currently April 2026. We're about to go into May, right? We got 3 days left in the month. So first thing I like to do when I come to the chart, I like to look at the economic calendar, right? Let's go ahead and look at the economic calendar for the week. This is back in November. Let me come up to April. Here we are. We're in the last week of the month. So it looks like we're going to get a full week of price action. And on Friday, we go into May. So let's look at the economic calendar. Tonight, I guess Donald Trump spoke. I guess I missed it. Did he speak? Who cares, right? Who cares? So just looking at the economic calendar, we got Monday, we have no economic news. So the market is most likely going to want to build in sentiment going into Monday. On Tuesday, we got consumer confidence, right, at 10 a.m. in the morning. Wednesday, we got rate announcements, big day, right? Wednesday, FOMC, federal rate announcements. Y'all let me know in the chat. Are they going to lower the rates? Or are they going to lower the rates or raise the rates? What y'all think? Or are they going to pause? Thursday, advanced GDP, PCE, employment costs. We got a lot of news from Tuesday to Thursday going into Friday as well. So I already can tell y'all now in the Discord. And again, if y'all want to join the Discord, the link is in the description. Y'all hit the like button. Pause. Y'all crazy, man. Y'all crazy. Hit the link in the description if y'all want to get in the Discord. The link is in the YouTube description. Y'all on X, y'all gonna have to come to YouTube to get the link because I'm not posting the link in X. X gets crazy, right? So I'm not doing that. Any platform is crazy, but X is a little different. But there's no news. There's a lot of news going from Tuesday to Thursday, Friday. And Monday for me is going to be a sentiment day. You already know in the chat, in the Discord, how Mondays get. Sometimes you get lucky on Monday as far as good price action. But for the most part, Mondays are like manipulation days. And you kind of got to filter that out. So I already can tell you, I'm probably not trading tomorrow, especially as the market runs higher. But Tuesday through Thursday, we're going to see. That's the rate. That's the economic calendar for the week. So I have an idea of when. So the purpose of this, y'all, for y'all that are brand new, the purpose of doing this is at specific times of the day when they release news, they inject liquidity into the market. So by knowing that, we have an advantage going into the day, right? We kind of have an advantage going into the day, knowing what's going to happen because of certain concepts that we know. Right, we're not chasing price. We're anticipating price moves to go to certain levels. And when they go to those levels, we go in, sniper precision, take opportunity, get in, get out, move on to the next trade for the next day. Right, we compounding. We compounding money. We looking for percentages. It's not even about the money. It's about percentages. If you can earn 5% a day or 10% a week, you do that every week. Let's say you got a goal of 10% every week. At the end of the month, that's 40%. At the end of the year, that's X amount of percent. I don't have my calculator. And then you consistently do that for the next 2, 3, 4 years, earning 10% a week. They already tell you getting 10%, 2% a year is doing excellent. But if you get 10% a week, which is very easy in trading once you know what you're doing, right? Once you know what you're doing, getting 10% a week, nobody can stop you. You're going to be in a different ballpark, a different lane, right? Make sure y'all hit that like button, subscribe. Shout out to y'all on X, subscribe. Follow me on X, right? Share the video. So the whole point of looking at economic calendar is knowing when liquidity is going to be injected into the market. Okay, so let me see. Let's come back to my NASDAQ contract right here. So follow me. First thing I like to do is I like to come to the chart, look at the monthly. At the beginning of the week, I like to gauge where we are in the month. And then also I look at the monthly. I look to the right of the chart. We got 3 days and 20 hours left for the week. You can always go back to the economic calendar, compare that. You can see Monday, Tuesday, Wednesday, Thursday. It's about 4 days. And then we'll roll over into the new month, which is May. Let's go ahead and take a peek at May right quick. Let's go to May. Let's look at the first week of May. That first week of May, which starts really on the 3rd. A lot of news. Let's go out to the 10th. PPI on that second week, the 3rd week of May. A lot of news. FOMC meetings, 4th week. What's a holiday? So on May 25th, we got a holiday. Okay, Memorial Day. Memorial Day on May 25th, right? So we got some opportunities going into May, right? Right ahead of, let's get it in. Let's be surgical before Memorial Day on the 25th, right? Let's take advantage of opportunities, right? They're going to definitely move these markets ahead of Memorial Day. Once we get to Memorial Day, it's going to slow down. We're going to go into them summer month. We're going to go into the summer month volume. Make sure y'all hit that like button, subscribe. Nobody subscribing, hit that like button. All right, so back to my NQ chart right here. Again, monthly time frame. We got 3 days left. Then I work my way down to the weekly. Now, inside of every monthly candle, there's roughly probably 4 to 5 weekly candles. So 1, 2, 3, 4. You can see the entire month of April, market broke all-time highs. We're currently in the stock market. We're in price discovery. It's an illusion. NQ is crazy. Yep. Make sure y'all hit that like button. And on NQ in the stock market, we're in price discovery, right? It's currently trading at 27,492. The best thing you can do is follow the trend, right? Just keep up with the trend, because you don't know when D-Day comes. They're going to have a D-Day. When D-Day comes, they're going to sell the market off sharply. But right now, we're in all-time highs. We're in premiums. And we don't know what we're reaching for. We don't know where we're going. So you remain bullish. In these conditions right here, you stick with the trend, but you got to be real nimble. You can't scalping pretty much, because you don't know what the ceiling is. Nobody knows but the market makers. Somewhere, let me put it in perspective for y'all. Let's zoom out. Also, let me pull up, I got to have the continuous as well. So this right here is the continuous contract. The continuous contract gives you way more history, right? You don't trade the continuous contract. It's just a data reference. It's a data reference. We use this as a tool or as an indicator to see how far price wants to go. But using the continuous contract somewhere up here, let me show you. We don't know. We're in price discovery. But the market makers that make the markets, which is central banks, they have predetermined sell orders somewhere at some level, right? It could be 30,000. You could just estimate like, okay, do we go from 27,000 to 30,000? But we don't know where they're going to peak it off at. Let's just say it goes up to freaking 37,000. Well, everybody's going to be remaining bullish. And it's like, these markets, the euphoria. People don't think the markets can come down until they come down. Right. So, and I think 37,000 is very high. I probably need to bring it down to 30. Let's bring it down to 30 right here. Because look, we don't know. All you can do is speculate. You can still trade it, but you got to speculate and you got to be real nimble. But 30,000, let's say it goes to 30,000, which is right here. The market makers already have pending orders resting above the market whenever the market is in price discovery. They're already up there staged. And when it goes up there, it's going to start showing weakness. It's not going to want to it's not going to want to show any more strength. For example, I can just walk y'all back to last year, right? Last year we broke all-time highs. Let's just walk back into time, because it's always in the chart. It repeats over and over again. So this buy side liquidity right there, that was last year. That was the high from 2021, right? The market made an all-time high in 2021, and then look, we had this sell-off for a few years. And then it rallied up in about 2023, and then 2024 broke it. Let me see. 2024, 25. Okay, let me show you this right here. This high right here. This is the high I want to show you. That's the high of 2024. And I could do this as well. Let me show you. Let me quarterly shifts. Pull out my quarterly shifts. I'll explain this tool in a minute, but it helps me look at the market in quarters. So what I do is I place one on this current candle, which is April, and I place another one on April 2025, which is right there. And I'm gonna do this 1, 2, 3, 4, 1, 2, 3, 4, and then 1, 2, 3, 4. One more 1, 2, 4 right there. All right. So this is a tool that I use called quarterly shift. As you can see, it's all naked price action. All naked price action. So we can break the year up in quarters, right? So this right here, this price rally here was in 2025. Right? So yeah, this high right here, 2020, when we rallied up in 2025, we hit all-time high. So what does that look like when we drop down to lower, let's say a daily? right? This is a daily time frame. So this is what the market looked like in 2025 when it rallied up and it took out the all-time high level right here. It went through it, blasted through it. And when it went into price discovery, look what the condition was. It went into sideways, large wicks, back and forth. People call that chop. And then they have a day like this because you're in price discovery. You just thinking it's going to go higher. And then they do this move right here. They drop it down. Everybody that was long because, oh, this the euphoria. We're going to all-time highs. We're just going to keep going. No, they're going to hit you with one of these right here, right? These undercuts. And they're going to take you out the market. And then they're going to buy it back at a discount. And they're going to keep it going higher. And you think you're going to break out again. And then they hit you with another one. So this is where we at in price discovery. They're going to have the market in these conditions. You can just go look back at old price data. And you can see what happened. So people think it's going to crash, and then they just keep pushing it higher. And then look at this right here. You see this candle right here? Y'all remember this? October 10th, 2025. Who remembers this day? Who remembers this day? Anybody? Y'all remember this day right here? October 10th, 2025. If y'all was with me, y'all definitely remember that day. That day right there, sold off. Boom, hit that low right there, right? But how many points was this? Let's put this in perspective. Let's say this high right here, the top of the candle down, right? That top of that candle down all the way down here. That was in one day, 1,200 point run sell off in one day. A 1,200 point sell off in one day. Do y'all understand how devastating that is to retail? Who remembers that day? That's the day I quit crypto. Yep. Look, y'all think it's random? Now check this out. I'm gonna be brief with this. Let's say Bitcoin. All right, let's come to Bitcoin. I'm gonna show you. Somebody said it's the day I quit crypto. That's crazy. Let's go to October 10th. October 10th. Boom, right there. Here it is right here in Bitcoin. In Bitcoin, a lot of people was hurt. And that was the beginning. That was the beginning of the retracement of crypto when it went into the quote unquote bear market. Prior to October 10th in Bitcoin, it goes up. It takes out buy side liquidity, right? What are they doing at buy side liquidity? They're offloading their long positions up here, right? That was the all-time high, I believe. Yeah, that was the all-time high. And then it slowly gradually starts to consolidate and retracement. And then October 10th on a Friday, it's always going to happen on a Friday, opens up, sells off in Bitcoin. You see that wick? Can't make it up. They went and took out the liquidity. That's in Bitcoin. You can see the same move in the NASDAQ. You see the sell-off? What else y'all want to see? I can go to literally every market and show you the same shit. Let's go to XRP, right? For my crypto people. Let's go to XRP. Make sure y'all hit that like button, subscribe. XRP, I could just look at this chart right here and be like, hey, this candle right here was D-Day. October 10th, same shit. That day, October 10th, the sell-off, right? Look at that. That devastated everybody. Boy, people was crying. People was crying, man. It was insane, bro. People was panicking like, oh, shit. Y'all don't think they don't have one of these left up their sleeve? I bet they do. Look, sell side liquidity right there. D-Day, October 10th, in XRP sell-off. That's the day somebody quit, right? Victor, it is called a scam wick. No, it's called algorithmic manipulation. That's what it's called. What scam wick? The markets are controlled. If y'all been following me, y'all know that. Chef, I was on the mountain hunting and I got a notification, my phone about the in crypto dropping. Yep. Some of y'all remember that day. AWB, epic as they come. Yep. Make sure y'all subscribe. Shout out to y'all on X. Subscribe, share the video, share the link. Y'all want to get in the Discord, click the link in the bio in the description. But yeah, I could take y'all to literally every market. What up? What else? What's another market? Did it happen in gold? Let me go look at gold. I believe it happened in gold. Let's go to October 10th. Was it here? No, that wasn't there. October 10th. I don't think gold was impacted by it. Wait. October. Right there. Yeah, gold went up. So yeah, gold went up. So this was October 10th of 2025, bro. That's crazy. And then came down on the 21st, and then it kind of went higher again. It's an illusion. It was called goddamn. Yeah, the really left my ass off. Gold was in January. Yeah, so it didn't happen in the metals, but they ran the metals up, right? While everything else came down. Money transitioned. Money followed or flowed into the metals market. So the metals had their time, right? The metals had their opportunity to shine. I remember. But yeah, man, just seeing it from different perspective, right? Seeing it from a different perspective. But let's come back to my NASDAQ chart. I just had to show y'all that for a minute because this shit ain't random. Shit is not random. So yeah, October, come down. We're in price discovery, right? So whenever the market is in price discovery, they have these days where they will pull this shit, right? And then it goes up, and then it goes into this range for like 100 and something days, and it's sideways. So this is a daily time frame, but it might look like it's short term. But in between each one of these vertical trend lines, that's about, let's see. That right there, that's 80 something days. That's 83 days worth of price action. Y'all see that? 83 days worth of price action. That's a long time. That's several months. Let's look at this quarter right here. Again, 84 days worth of price action. So this is how long and drawn out this takes. Right? Price rallies up right here. You see the run up. What does it do? It look to the left. It runs up, takes out buy side liquidity right here. Takes out the buy side liquidity. Same shit I just showed you over here on D-Day. D-Day of this. But go up, take out buy side liquidity. They offload their longs and they short it down to clear out all the sell side liquidity and people trying to go long. Right? After they take it down to discount, they buy it back. Look at this. Look at the precision. See the fair value gap? The BISI. Buy side imbalance, sell side inefficiency. Let's drag it all the way over to the right. You got to have the eyes for this. It takes a lot of hours to understand this. Look at that. You can't make that up. Right? You can't make that up. It drops down, tags the BISI. Bing. That's where you think they're buying at. You can't make it up. And then they send it higher to clear out the all-time high. So my whole point in doing that was showing you where we were last year at all-time highs. And whenever we're in all-time highs, you got to be very nimble, right? This was last year's all-time highs. You got to be very nimble as this market continues to go higher because, you know, it could get real crazy for you. One second. All right. So this is where we at right now. This is where we at. Let me come back to my contract, right? Let's come back to my contract. So what I want to do is on the weekly, all right, I already got a bias on where we're going to go. We're bullish, right? The market, are y'all bullish or bearish? Y'all let me know in the chat. It's obvious what it's doing, but I just need to hear it from y'all. Are y'all bullish or are you bearish? Let's go down to the daily. Now on the daily time frame, you already can see Monday is trading. Excuse me. The market doesn't officially open until 9:30 Monday morning. I don't do nothing on Sundays. I used to. I don't do nothing on Sundays no more. Sundays, I don't trade. I just kind of analyze and forecast what I want to see in the market. And as you can see, market already out the gate moving higher. So what I want to do is let's drop down from the daily. Let's go intraday to the 1 hour. And a few things I need to get done, I might as well do it here and teach y'all some concepts, is I want to find and determine the new week opening gap, right? I need to determine the new week opening gap, which is right there. So what I'm gonna do is what you want to do when you're finding the new week opening gap, because every week the market opens, it gaps down or higher. It's an illusion. Bearishly bullish. That's funny. What you want to do is you want to come over here. You want to find Sunday's close, right? Sunday's closing price. That's what you want to find, which is right here. This is a 1 hour time frame. The market closed 4 p.m. on Friday, right? And you want to calibrate it. You want to get the specific price, which the price of this, the close, was at 27,440.75, right? So that line right there is the top of the new week opening gap. And then what you want to do is you want to get you another trend line. You want to label them as well. You want to label them. So I'm going to come down here. You want to find the opening price of Sunday, which is today. Opening price on Sunday, 6 o'clock, 27,404, right? 27,404 right there. And y'all, we just discussed this. Y'all in the Discord, we just discussed this yesterday. Where it could retrace. And I gave y'all two options, the 4 hour to 1 hour. Opening price, 27,404. Right there. And I'm going to get a little midpoint level so we can identify the midpoint of the new week opening gap. All right, midpoint of the new week opening gap, which is right here. This is the new week opening gap, y'all. If you don't know, now you know. You're learning something, right? For free. New week opening gap. What's the purpose of it? Well, I'm going to let y'all determine once y'all start using it and playing with it a little bit. Pause. But look, we close on Friday. We gap down lower. The gap is about, let's measure. The gap is about a 38 point gap. Not a big gap at all. But when it gaps down to open up the week, it trades right down into this level right here. Y'all in the chat, what is that right there? Out the gate. I told y'all over the weekend and last week, they're going to run it higher out the gate. You know, the gap wasn't large at all. What is that right there? Shep, Bissy. You're correct, Shep. Dorelli, Bissy, yes. Dorelli, come in the Discord, bro. Come in the Discord. Don't be shy, man. Come in the Discord. Come communicate, commune with us, right? You can be there and commune with us. We do the voice chats. We be chilling, bro. So I want to see some of y'all come in the Discord. But yes, y'all are right. That's a Bissy. Buy side and balance, sell side and efficiency. We tap it and go. You see that? Very bullish. Trade down into it, tap it and go. Bissy, right? I'm going to add a Fibonacci on top of it. From the high of the fair value gap to the low of the fair value gap, can you make that up? I don't know if you can make that up. Let's zoom in a little bit for the people that don't think the markers are algorithmic, because they are. We use this Fibonacci to measure the gap for weakness and strength. Well, you to be the judge. When price wicks into it at the open, it trades down to the 0.75 level. Do you see that? Can you make that level up? Huh? Can you make it up? Is that random? Can you see it or can you not see it? I don't think that shit random. Make sure y'all hit that like button and subscribe. Once it taps it, right, it goes, doesn't come back. Nobody had a chance, right? Donald Trump, they had their orders in. You know, the elites, they had their orders in. And guess what? Now you're stuck. Most people right now, well, let me buy. I'm gonna chase price. You might get some money chasing it, but you're not gonna have a long career doing that, right? It's clearly at a premium. It's in price discovery. It's moving higher as we speak, right? So that's the NASDAQ doing what it does. Let me see. Let's throw up my weekly dividers. Do I have my weekly dividers? No, that's not it. Quarterly shift. I don't think I have mine on my chart. Nope, I don't have it on this chart. Oh, yeah, there we go right there. All right, weekly dividers, right? I taught this in the past. This is like a tool that you can use to anchor and get anchor the weeks of the week, you know, the trading week. We use this as a guide. I no longer need to use this, but I still use it just to stay sharp. But I no longer have to use this to look at the markets. I could just look at the market now and kind of just, you know where we at in the week and the day, you know, but that takes time. Y'all get there eventually. So between each one of these vertical trend lines, it represents the week of trading. So if we just look back to the left of this vertical trend line, the week starts on Sunday, right? The market doesn't open until 9:30 Monday every day. So, but it's 20, you can almost trade it 24 hours. But the week starts on Sunday, 6 o'clock p.m. And what you can do is you can look at last week's price action, right? In this window right here, this is last week's price action. I'm just trying to show you something. Let's just say this right here. This swing low right here up to that swing high right there. That's a quick little dealing range. You're looking at the weekly range, by the way. So the low of the week forms on, guess what day? Tuesday. If you don't know, the high, the low of the week normally forms on Monday, Tuesday, or Wednesday. It forms on the Tuesday. There was the low of the week last week. On a Tuesday, it rallies higher. And when it made that low of the week, it also traded into the 4-hour BISI. It's an illusion. I'm trading YM this week. I can't look at NASDAQ. Makes me think my kids are never going to be able to move out. Yeah, man, it's an illusion. Hey, I was just discussing this. Younger generations, they're not going to be able to, it's a struggle for them, right? And those generations, you got to think smarter, right? My generation, we got to evolve, right? We're not going to see Social Security. We're not going to get this shit. So we got to double hustle. This is one of the ways I'm teaching y'all, right? This is one of the ways that I'm doing it. Let me make a quick post on X. It's pretty cool. I can be live streaming, posting on X. If you just joined, make sure you hit the like button, subscribe. All right. It's an illusion, 100%. Appreciate y'all joining, man. If y'all just joining, so I'm looking at the NASDAQ. I'm looking at last week's dealing range or last week's price action. It ran off last week. Marcus, there was a few opportunities if you knew what you was doing. But what I'm showing you right here is the swing low, which made the low of the week on Tuesday. It rallied up on Wednesday. It retraced several times. Right. Let me just extend that out. So when it retraced several times, we had some manipulations in there. Somebody called it a scam wick earlier, but no, it's just them going down, taking out buy orders, and they're accumulating back at a discount. Drag this over. Look, 4-hour BISI, manipulations, market makers. They go in there, sell it off, 4-hour BISI. Also, look, this is a 1-hour time frame. We're intraday or intra-week. What is this candle right here? Y'all let me know in the chat. On the 1 hour, the markets are fractal. Every time frame has a parent time frame. So whatever is going on the higher time frame or whatever is going on the lower time frame is being influenced by the higher time frame. What kind of candle is this in the chat that I have my cursor on? What am I referring to? Yes, Shep. It's a bullish order block on the 1 hour, right? So I'm gonna tag that right there, drag it to the right. Can't make that up. We can label it. I'm going to label it bullish order block right there. Boom. Drops right into it. Also drops into the higher time frame 4-hour fair value gap. What does that look like? Go out to the 4-hour, right? 4-hour fair value gap. Right here. You see that? Higher time frame gap that they keep referring to. They're buying it at this discount. Algorithmic price action, not random. It's coded. It's going to refer back to certain levels over and over and over again. That's exactly what they're doing. They drop down. That's where they accumulate at. This displacement higher. They retrace a lower again into this 4-hour BISI. Yeah, they trade up through it. But check this out. What is this right here? Y'all let me know in the chat. This down close candle. What is that right there? There's different ways you can get in this market, right? You don't have to always be zoomed in on lower time frames because you know why the market is trending. As the market is trending and breaking new all-time highs, you got to zoom out. What is that in the chat right here? This candle right here. Yes, AWB or order block on the 4-hour. Many moving parts. The market is trending, so you can zoom out a little bit, get a little comfortable. 4-hour order block right there, right? Trades right down into it, trades down into the BISI. And then look, comes back up, goes higher. Gaps open the next day and just run off. And that's what we're seeing currently. They're not giving y'all a freaking opportunity to get in. But if you learn this skill set, you can know how they move, right? You can know how they move. Now, again, like I just showed y'all, we're going into the new week, right? All of this price action to the right is to be forecasted and determined. Let's go up from the 4 hours, go down to the 15-minute. Drop down to the 15-minute. Clear this up over here on the left. Make sure y'all hit that like button, subscribe. On the 15-minute, I got my daily dividers. I might do the daily dividers. All right, let me do this right quick. 15 minutes. Let's go back out to the 1 hour. I'm gonna show y'all the daily dividers. So what you do is you go from Sunday to Sunday, draw a vertical trend line, 6 p.m. Sunday to the following 6 p.m. the next Sunday, right? Once you do that, we can look inside that window in time, and I'm gonna do this right here. 6 p.m. We're gonna go to 12 o'clock midnight on Monday. 12 o'clock midnight on Monday, Eastern Standard Time. That's key, Eastern Standard Time, and we're gonna draw a trend line right there. Let me see. All right, this is gonna be my daily dividers, right? Daily dividers. Make sure y'all learning something. I'm over here giving y'all free game, right? Free of charge, not charging y'all nothing. If y'all want to join the Discord, click the link in the description. Join the Discord. I'm gonna label this daily dividers, and this helps y'all if y'all brand new. Daily dividers. If you're brand new, this will aid you to start training you how to see the markets. This is going to start training you how to see the markets in a certain way that you've never seen it before. Just some simple trend lines. 12 o'clock midnight, which starts the new day, to Tuesday, 12 o'clock midnight, which starts the new day for Tuesday. The algorithm, the code resets every day at midnight. Every day at midnight, the code will go into factory reset. Shout out to you, AWB, right? 12 o'clock midnight, right? 12 o'clock midnight, which is Wednesday. You're going to go to Thursday, 12 o'clock midnight. Right there. All right. And then Friday, 12 o'clock. Well, the market closes on Friday, and here we are beginning a new week. I think I can label these. Let me see. Can I label these? Damn, I thought I had these labeled. Oh, yeah. Here we go. Monday, right? Monday. We can do Tuesday. We can do Wednesday. We're going to do Thursday. Also going to do Friday, right? So now we got the days of the week. We got 24-hour windows. So whenever you view the market like this on the 1 hour, right? This is fractal price action. The daily, when you go out to the daily, you're going to see you're going to see daily candles. But when you drop down the lower time frames, this is what that daily. So if you go from the daily time frame to the 1 hour, this is what it looks like, right? If that makes sense. You're zooming into price and you're looking at it fractally, right? I could just look at this and show you all kind of moves and setups. This was last week's price action. AWB, you said for real? What's up, man? What's up? I'm just messing with you, AWB. All right, I'm just messing with you. Appreciate y'all on X, man. Make sure y'all hit that like button, subscribe. If y'all on here, share the video. If y'all want to join the Discord, y'all come over to YouTube, click the link in the description, in the chat. 20 people watching on X. Only got 13 people watching on YouTube as of right now. It's people coming in and out. So I guess if I keep reposting on X, more people will come. If you're just joining, this is an educational channel, right? Educational stream. I teach y'all coded in-depth price action. I don't even know what to tell you. But anyway, looking at this right here on the 1 hour, I see all kind of setups that happened last week. You might not see it, but I see all kind of setups. My first thing that my eye goes to is where the liquidity is. It just pops out at me. I could see it. For example, again, last week we opened up on Sunday, right? We consolidate. But I tell y'all, on Sunday I don't trade. Let me hide this right quick. Let's hide these 4 hour fair value gaps, because guess what? You don't even have to use the 4 hour fair value gaps. You can use some other shit, right? You don't need nothing. You could just be present. But the market opens on Sunday, right? And it rallies up or it goes higher on Sunday. It's in between a new week opening gap. I'm not engaging that. But the first thing I see it does on Monday during the New York AM session, it just sells off. And when it sells off, look where it goes. Takes out previous session low right here, right? It takes out a previous session low. Right here. So the New York AM session at 10 a.m., the market just opened in the equities. But overnight, it went down and took out the London lows and the Asia lows, right? And I'm looking at this from a 1 hour time frame. And when it does that, I can zoom in on lower time frames right here. See this section in price on Monday. On Monday, let's say it goes here and we target this high right there, right? Just on Monday. Buy side liquidity right there. You're out of the market. You can't make this shit up. It's algorithmic. It's repeats. It's coded. Whatever you want to say. Price drops down, takes out liquidity. Now let's work our way down from the 1 hour to the 5 minute. And if you don't know, this is called back testing. This is the only way you're going to get better. You got to come in here and back test the markets. But look, price always seeks liquidity. The market opens at 9:30. It sells off. Takes out sell side liquidity. See these lows in here? Sell side, right? Sell side liquidity. What's below those lows? Orders. Do you think it's random at the bottom of the new week opening gap? Yeah, it wicks below it. But look where the bodies are at the bottom of the new week opening gap, right? And then they buy it back. Now let's work our way down lower. Let's go down to the 1 minute on Monday during the AM session. During the AM session. Back on Monday of last week, they take out liquidity. They have pending orders down here that are staged already. Displacement up, right? The move up, right? They send it higher. And when they retrace back down, y'all in the chat, what is this right here? What is this right here? Y'all get some participation going. What is that right there? Right? What is that right there? Come on now, let me get some participation. Yes, BISI, right? So it goes up, right? And it retraces down. They give you a BISI entry. They give you a BISI entry, buy side imbalance, sell side inefficiency, which is a fair value gap. Also, look, consecutive down close candles right here. The only reason I know I'm confident in going long if I took this trade is because we took out liquidity. You have to have an understanding about liquidity, right? You got to know what liquidity is. Once they take out the liquidity, they have orders, and a lot of people will get hesitant. A lot of people will get chopped out of this. They don't have the confidence to buy that right there inside of this BISI because they might see this right here. But guess what? When this did this right here, where did it go? Check this out. What is this right here? Y'all in chat. What is that right there? It's gonna go to specific levels, but you got to know what is it doing? What's the purpose of it attacking liquidity and doing something different? What is that right there? So you might see this one right here, and then it trades down into this BISI right here, right? Offering you a deeper entry. Smart money accumulation. Oh, is it random neither? Is it not coded? Do you not think it's coded not to do that? I'm just saying, this has to be code, right? This has to be a script. It has to be an algorithm. Trades right down into that BISI. What happens if I lay my Fibonacci over that? Let's lay my Fibonacci over this. Imagine doing this real time as well. Doing this in real time. That's the quadrant levels. Also, let's say this eighths right there. So when I add my eighths, price trades down and tags 0.875 level. Do you think that's random, right? You might initially in the beginning, you see a fair value gap. You might try to get in. Well, I'm going to tell you what's going to happen. When y'all start trying to live trade, you're going to be trying to buy. You're going to try to anticipate the fair value gap, but you're going to be buying outside of it, right? You're going to try to like get in and you're going to be entering because you're impatient. You're going to try to enter before it comes down to here or comes down inside the fair value gap. And then once you kind of get that under control, you're going to only aim for the top. But over time, with experience, you're going to start aiming deeper and deeper inside the fair value gap using this this Fibonacci tool or this Fibonacci setting, and using it as a measurement tool for deeper entries. And you're also looking for either support or resistance inside these gaps. But you can see it trade down. That's not a random level that I just came up with. No, it's algorithmic. It tags it and then boom, displaces higher, right? Starts moving higher. That's one entry. That's where the institutions are getting in at. Now, what does this look like? Let's zoom back out to the 1 hour. You see that right there? What do I mean when I say, hey, they're buying underneath liquidity, sell side liquidity, and they have pending orders? That's what it looks like right there. Let me show you this. That's what it looks like in this window. Now, let me go out to the 1 hour. Back to the 1 hour. Back on the 1 hour time frame. What do I mean? They're buying, they have orders pending under the market. This is what I mean. You can't see it on the 1 hour, but if you drop down to a 1 minute, there's all kind of entries that you're not seeing. Do you see what I'm saying? They drop it down, take out sell side liquidity on the 1 hour. You see how I frame it up because I've seen this over and over again. It just pops out. When I zoom out again and I frame this up for you, right? When I frame this up for you, you're probably just seeing price action. But no, it can get real dangerous and real surgical if you want it to be. How bad do you want it, right? How bad do you want to get surgical and dangerous? That's what y'all need to ask yourself. Make sure y'all hit that like button, subscribe, share the video, share the live stream. How bad do you want to get dangerous with this skill set? Because it can get real surgical, right? And every time I say that, I think about Denzel Washington in Training Day. It can get surgical without the profanity, right? It can get surgical without the profanity. Now, on this trade right here, back on the 1 minute, there goes the entry. As soon as you get your entry, what am I looking for? Soon as I find my entry, I'm looking to the left of the chart. What am I looking to the left of the chart for? I'm over here looking for exits to get the hell out of Dodge. So right here, you see buy side liquidity right there, which happened in the AM session. They're leaving behind orders. That's buy side liquidity, right? Bing, just like that. Also the midpoint of the new week opening gap. You see this dashed line right there? That's the midpoint of the new week opening gap right there. Is it random? Is it random that they lay orders right at that high right there? Huh? Is it random? I don't think it's random. They lay orders right at that high right there. And look at the reaction in price when it goes there. Trades into it. They offload their longs. They short it down, right? Got everybody chasing. And then they liquidate chasers. See that pullback? And when they pull it back, what is this right here in the chat? Come on now. What is that right there in the chat? Make sure y'all hit that like button, subscribe. What is that right there in the chat? Right? You got to see it differently. The markers are coded. What is this? Make sure y'all hit that like button, subscribe. Y'all not subscribing. Y'all got to subscribe to this information. Right? If y'all want to join the Discord, it's open free for now because I'm going to close it off here shortly. So if y'all want to get in the Discord, click the link in the YouTube description. In the chat and get in, right? Yes, y'all are right. That's a busy, right? So is it random they hit the liquidity and then they offload positions that y'all can't see? They have algorithms in large positions using high frequency algorithms, right? They offload their positions, they short it back down to an opportunity so that they can get in. Look, consecutive down close candles. You can get in on that. You really can get in on a lot of shit, right? Y'all can get in on the most random shit if you understand what order flow is. If you understand order flow, right? We got 30 people on X. Shout out to people on X. Y'all subscribe, hit the like button, and follow me on X. Follow me on every platform, pretty much. I'm multi-streaming now. I'm streaming on YouTube and X. So look. It's not random that they go up, take off position. So let's go back. Let's just kind of go back, right? So let's put some math to it. Let me pull out. Let me show you in a minute. So smart money. Imagine entering down here inside of that BISI at discount underneath liquidity. This is called a smart money reversal entry, right? Smart money reversal. Smart money is buying underneath lows. What's up, TZ? TZ guy 1906. Appreciate it. Reposting the stream. What is smart money reversal? That's when they're buying the market underneath orders, underneath lows, right? And they're doing the same thing above highs, but they're buying down here. Let's go from this BISI up to this high right there. How many points is that? And I just explained to y'all, minis are $20 per point. Micros are $2 per point. Let's say we enter right here and we go up right here to take profit. That is a 128 point run, right? Let's pull out the calculator. Let me get the calculator. Right, that's a 128 point run. Let's do both minis and micros. Scroll to the left, right. So if this was a micro, right, you would take, let me do this. It'll be 2 times 128. That's $256, right? Everybody can use an extra $256, right? Especially people that work and need extra income. $256. All you got to understand is where the liquidity is. What are they trying to do around liquidity, right? All right, cool. Now, if this was a mini, it'll be 20 times 128. That's $2,560, right? $2,500, just like that. Everybody can use an extra $2,500, right? But look, the price run, how many points? Well, let me do this. How long did that trade take? And it's gonna put it in perspective for you. So if you enter down here at discount and it comes up to the liquidity about right here, that took you about 2 hours and 37 minutes, right? 2 hours, 37 minutes. Some people don't make $258 in 2 hours, right? Most people don't make $2,500 in 2 hours. So put it in perspective. Put it in perspective. What about, let me do this. All right. So what if you would have held longer? But what they're doing is they're taking profits, right? They're taking profits off the table. But what if you hold it for a little bit higher price? Well, they're taking partials right there because they're putting on, again, one contract of NASDAQ for 128 points. That's $2,560. But what if they add, 10 contracts? Because there's a lot of entities and real people out there and traders that can put on that type of equity on a trade. So let's just say 2,560 times 10 contracts, $25,600, just like that in 2 hours, right? There's people out there doing it. You might not believe it. There's a whole lot of people out there that's doing that type of trading and doing it in 2 hours, 25,600 in 2 hours. Institutions are doing way more than that. I'm trying to keep it real simple to put it in perspective for y'all. I ain't trying to give, I'm not trying to really, go out there with y'all just yet, right? You got to learn before you can, you got to crawl before you can walk. Again, look at these highs up here, right? I look at these highs and be like, that's buy side. The market is bullish. They're going to attack the buy side liquidity. So when they do, look, they go up, attack more liquidity. Do you think it's random? Look at the reaction. This is how you know it's coded and it's not random. When they rally it up, look at the reaction in price right there. It hits the liquidity. What are they doing above liquidity? They're shorting the market, right? They short it back down. Oh, is this random? Is it random or is it coded? Right? Why is it returning back to these gaps? So, it's because the market is leaving behind inefficient price action. So what the algorithm is coded to do is return right back to the inefficient price action to offer either a discount or premium prices. In this case, a discount. They're going to want to refer to this gap to offer themselves a discount. Well, you might say, well, what about this gap right here? You see this gap? Why did I skip this gap right here and go down to this gap? Well, I didn't skip that gap. I'm just using a specific gap. But look, this gap right here, they trade through it, right? But that doesn't mean you throw the gap away. Let's drag it all the way out to the right. Bing. Is that random? Let's keep dragging it. Let's drag it all the way out to the right. Do you think that's random? Is it coded or is it random? So what do I mean? You see this gap? It became inverted. It's an inversion fair value gap. And they trade down to it. Look how the bodies are respecting it, right? And then they drop it down, fill it in. Now, they didn't just drop it down and fill it in. Oh, when they did fill it in, is that random? Why do they trade down into that inversion fair value gap, tap it, and then go higher? I don't think that's random. What's up, Jason School? Yes, reclaim Bissy. Yep, you already know the lingo. Again, if y'all want to get in the Discord, I would like to see some of y'all in the Discord. The link is in the description. It's free, right? Yes, it's a reclaim Bissy. Also, check this out. Let's go ahead and lay a Fibonacci over that, right? Lay a Fibonacci over that, and we can see how price is reacting to these fib levels, right? These fib levels. You can see how it retraces into this one, acts as support and goes. It comes back. When it comes back, though, look at these levels in here, right? That's liquidity. They're coming down to take out the liquidity, right? They're also leaving liquidity inside of these gaps. Sell side liquidity right there, right? Sell side liquidity. They take it out, right? And then there's even some more. Like we can use that one as well. They take out liquidity. After they take out the liquidity inside of the Bissy or the inversion fair value gap, it shoots higher. When they shoot it higher, what do? They clear out the buy side, right? Look at these swing highs. They're clearing out the buy side liquidity right there. Can't make this up. Same kind of reaction. They clear it out. They offload their longs and they short it back down. And when they short it back down, they're shorting it back down inside that inversion fair value gap. But also they're taking out the swing lows because that's where they had pending orders at, right? People that was holding and got a good price. Nah, you think it's not that simple. They're going to come back and hunt that, right? They're going to come back because they're greedy. These entities are very greedy. They don't give a fuck, right? They don't give a damn. They don't give a damn about you, your family, your dog, your cat. They don't give a damn. They don't care about your children. They're going to come for everything you got, right? And they come back, they liquidate you, right? They accumulate at a deeper discount, and then they, boom, displace higher. On this time frame right here, which is a 1 minute, you can see how prices doing this thing influenced by the higher time frame. Look at that BISI right there. Trades down into it, rally higher, right? And then it goes back up. So repeating functions. So that was just Monday. Let's go back out to the 1 hour. I'm just showing you, what I'm showing you is dozens of price moves. If you think you can't do this, right? If you think you cannot trade because you kind of hesitant, or you kind of like, I don't know, you're thinking more long-term. Most people just kind of got that long-term perspective. But all of that time I just spent was on the 1 minute time frame. I mean, the Monday, my bad. All that time I just spent was on Monday, right? On a Monday. I haven't even got the Tuesdays trading, Wednesday trading, Thursday trading. That was just on a Monday. Jason, what specifically do you think moves price? There's coded algorithms, Jason. That's what I think moves price. There's coded algorithms. My bad. Let me remove the calculator. Fuck. All right. There are coded algorithms that are at the highest levels of banking, which is central banking, and above them, they have data centers, right? These markers are in data centers that are probably buried inside of a mountain, right? They have multiple data centers. They have many locations that control these data centers. They have backup data centers. So if one goes down, another one can keep functioning and running the markets, because you're talking about all the money in the world. I don't care what industry you're talking about. When you come over to this industry right here, this is all the money, not just, I'm talking about all the markets. We're talking about industries that make up the economy. People will not have jobs and businesses if it wasn't for the stock market, right? People cannot generate wealth if it wasn't for the markets. So yeah, algorithms are influencing the market. If y'all on X, let me see who's on X. Make sure y'all subscribe. I might have to do another repost. Every time I repost, more people come in. I got 34 people on X. Y'all keep sharing the video. Let me do another post, man. I got something. Might have something going. More people watching me on X than people are watching me on YouTube. YouTube is a little funny, man. YouTube need to show some love, because I've been here, right? Y'all subscribe to me on X. Give me 1 second, y'all. Make sure y'all hit that like button, right? Subscribe. Free link in the chat description. Come into the Discord, right? I'm just walking y'all through how price. Are y'all okay? Y'all let me know. Are y'all not convinced that the markers repeat? Do y'all not think the markers are coded and algorithmic? Y'all let me know. I'm showing you real time. If you just joining and haven't had time to just kind of sit down and investigate what I'm talking about, just go back and watch the live stream, right? Just go back and watch the live stream and you'll see what I'm talking about. So what I just went through and broke down for y'all was the 1 minute time frame. I mean, y'all forgive me. It's been a long day for me. What I just walked through was Monday's price action. It was Monday's price action. And then guess what? The market crosses over into Tuesday of the week. And on Tuesday of last week, it took out the all-time high from the previous week. Right? So let me show you. Matter of fact, let me remove that right there. And all I'm going to do is I'm going to draw a trend line. So right here, this high was from the previous week. It formed on a Friday, right? Friday of the previous week of of that week. So it went up on Tuesday, early morning, 7 a.m., right? 7 a.m., which is New York pre-session. Market rallied higher and took out the previous week's high. Look at the reaction in price, right? Are y'all not convinced that something is going on in these markets? Huh? Or you're not convinced. So price goes higher on a Tuesday, takes out the previous week's high, which was the all-time high. They have long positions up here, right? Now let's go down to a 1 minute time frame on Tuesday of last week. And let's just discuss how many moves are taking place. Because y'all, I don't know what to tell some people, right? I can lead you to the water, but I can't make you drink it, right? I can lead you to the water, but I can't make you drink the damn water. And I'm sitting here trying to force you to drink the water, but you just won't drink the water, right? Trust me, I'm not Jim Jones, right? I'm not trying to Jim Jones you out here. I'm not trying to get you to join a cult. I'm just trying to show you that I'm Neo in the Matrix, right? I'm Neo in the Matrix. Let me show y'all that right quick. Right, let me show you right quick. Let's come to my X. I got it tagged on my bio. Let's come to X. I'm Neo in the Matrix, right? When you finally decode the markets, right? This is what you start. It starts slowing down. As y'all can see, I'm explaining to y'all. It has clearly, like, y'all probably haven't been with me. You might be new to me, but the way I'm explaining it is in a slowed down perspective, right? Right. So when you finally decode the markets, everything slows down. You start just understanding like everything, like risk management, slippage, manipulation, spreads, liquidity, fair value gaps, how the order flow, right? How the market moves, consolidation, expansion, retracement, reversal. All this shit has slowed down. And here I am teaching it to y'all in a slow version, right? Slow version. Let's come back to my chart. So again, when I come back over here, we go up. No Diddy, what I said, man, what I fucked around and said. I must have said, I got to watch the replay. Now, I don't even know what I said. Pause. If I said it, then pause. But anyway, we go up, we take out previous week's high, right? And way up here, again, the smart money reversal entry. What are the market makers doing up here? They take out liquidity. It gets real surgical, right? From the 1 minute time frame. Can y'all handle the 1 minute time frame? Y'all let me know in the chat. Is that a time frame that y'all can handle? But it goes up, take out the buy side liquidity, and it drops displacement. Now, look at this right here. What do y'all see in this? Well, I'm just gonna help y'all out. This swing high right here, this swing low right here, that's a dealing range. After taking out liquidity, I'm watching for specific things. That's a dealing range. Right there. When it drops down like that after taking out key liquidity and it takes out these lows, that's an indicator for me to start looking to get into the market, right? So it takes out those lows. Yes, it trades down into this right here. It's a BISI. But when it retraces back up, you want to be a short seller in the premium. Lenny, you said you caught this trade? I remember. At the smart money reversal, right? Smart money reversal. This is an entire model, right? You can be, if you were somebody who want to get in and get out, you just aim for these lows over here, right? You see these lows? But we'll come to that in a minute. But with this right here, I can use the dealing range to short at premium, or I can use OTE, which stands for optimal trade entry, right there, right? It's just a different fib setting. It's the same concept, but you're only looking for one side of the market to get on, pretty much. I'm looking to get an optimal trade entry above the 50% level at a premium to short the market. It's not random. These are entry techniques. So it takes out key liquidity. I'm always framing my trades around liquidity. I'm waiting for liquidity to be taken out and we go in the opposite direction. And then I'm going to align myself with higher time frame order flow. But when it comes back up to a premium, you start hunting your orders. Look over to the left. Y'all in the chat. What is this right here? What is that right there in the chat? What is this right here? What is that right there in the chat? Anybody? Come on now. Get the participation going. For y'all that know, I understand. Y'all already know. Y'all been trained. But for the new people, what is that right there? Yeah, bearish order block. You see the bearish order block? Yep, you're right. Right here. See bearish order block? See how everybody is different? J Master, you see the order block. AWB, you see the SIBI. It's whatever you want to use. Look, you don't even have to use none of that. You could just enter, right? Look, you can enter on the 0.5 level. You can enter at equilibrium. You can enter at the 0.62 level. You can try to enter at the 0.75 level, but equilibrium, 0.62 level, you can use those without even using the fair value gaps or the order block. You can use those. And then look, when it trades into this or at a premium, it displaces lower, trades back up. Look, bearish order block, displaces lower, creates a suspension gap, trades lower, retracement, doesn't really key off of nothing. And then it drops, specific time of the day. This drop right here was during the macro, 750 to 810 macro right here. It sells off. This was 759, so we was about to cross over to 8, right? And when it drops down again, look, it creates another range. I'm not going to highlight it, but it creates another range. And when this retraces up, look right here, bearish order block. Can't make this up. The markets are coded. You just got to know how to read the markets. If y'all want to learn how to read the markets, y'all tap into the Discord, right? It's right there in the description. Y'all tap into Discord. You just got to know what the market is doing. You got to see this over and over and over again. Neo in the matrix. Trade back up. Bearish order block right there. Entry. Short entry. This up close candle. That's a bearish order block. You enter on that, right? You can enter for order blocks. You can enter right here at the opening price of this candle. Or you can demand a little deeper retracement inside of it, right? You can also lay a Fibonacci on the order block. You can lay a Fibonacci on the order block, and you can use this. Let me show you right quick. You can use the order block for entry point. So you might, in the beginning, in your learning journey, you might want to demand the opening price. But also, it can get up to the 0.25 level or deeper inside of the order block. That's your entry. And then it sells off, right? Sells off, attacks liquidity. When it starts moving lower, I'm looking to the left of the chart. And I'm looking for where the lows are. The one that sticks out, well, right here. Sell side liquidity. Boom, just like that. Takes it out, right? Sell side liquidity, taken out. Price retraces back up, eventually rolls over again, and it's going to want to see all this over here. Look, all these lows. To me, that's where the orders are. It's clear as day. They can't hide it from you. It repeats over and over again. Sell side liquidity, boom, just like that. Takes it out, drops lower, and then it reverses on higher time frames. But look, the whole point of this is all you need. This is all you need. So let's say you enter back up here in OTE, right? Entry right here, sells off right there. That's 56 points. You can do a lot with 56 points, right? You can quit your job with 56 points a day, right? Over time, not in one day, over time. Or if you got enough equity, you can make more money than you make in a month with 56 points, right? Let me do this right quick. Let me show y'all. Let's just pull out the calculator, right? And what I'm gonna do in the calculator is, let's do 20, because we're going to trade a mini, right? 20 times 56, right? 20 times 56, that's $1,100, right? But let's do times 5. 20. That's $5,600, right? 5 mini contracts, one setup, right? One setup for the week. Imagine doing this, one setup for the week, right? One setup for the week, you walk away. You don't have to do nothing else for the entire week. One setup for the week with enough equity can make your entire monthly income. Your entire monthly income on one trade from here down to here, and it took 27 minutes. That's what I'm saying. That's what y'all might not be understanding, how fast it can come. That's why trading is addictive, right? Very addictive. But in 27 minutes, with enough equity for 56 points, which is very easy to do, you can make your entire monthly income. You know, a lot of people don't make $5,600 a month. You know, there's a lot of people that don't make that. But imagine doing that in 27 minutes and you stopping for the entire week and then come back next week and doing it again. That's just one trade. I ain't talking about more moves out here. All right. Let's say you hold that trade, right? Let's say you hold that trade from entry down to this low right here, which was where the orders are. Let's go ahead and round it off for 100 points. That'll be I don't know if y'all could have seen that, but right there. Let's round it off. It'll be 20 times 100. And we're going to use 5 contracts. We're going to do the same thing, 5 contracts times 5. That's $10,000. How long did it take? Well, let me show you. Let me show you how long that took. $10,000 from entry, take profit right here. And it actually went lower, but we're going to stop at 100. But right there, 1 hour and 42 minutes, $10,000 with 5 mini contracts, right? What would that be with micro? So you take 2, which is $2 per point, times 100. That's $200 times 5. That's $1,000. How many of y'all? I mean, who gonna complain with making $1,000 in 1 hour and 42 minutes? Huh? It's all subjective. It's all about perspective. But here I am showing you how it works. Here I am showing you how it works. Let me hide this. The markers aren't random. They're algorithmic. They're coded. I'm sitting here showing you how they're coded. They're algorithmic. They repeat over and over again. Also, I can use this as a measurement tool, right? This OTE range that I just drawn, that's a measurement tool. Even though it's retracing higher into a premium, I can also use it to forecast where price is going to go. And when you can use exits, you don't even have to use the liquidity. You can use the levels for exits. You might not want to hold to liquidity. You can take profit right here at the negative 1.5 fib pool, right? You could take profit right here at the 1, the 2. But me, I'm going to hold for the liquidity. But you can scale out your position before it even gets to the liquidity. You're paying yourself. You're paying yourself. Make sure y'all subscribe. Hit that like button. We're going over how the markers are algorithmic. It's coded. It's not random. This shit repeats over and over again. Talking about the NASDAQ right now. Right. So look, we're just in Tuesday of last week. Look how, Tuesday of last week, there was even more setups as well. For example, on that same day, Tuesday, you just got to be an early bird. Some of y'all are over there in the UK or wherever you at in the world. It goes up, takes out buy side liquidity, right here. This was overnight during London. 1, 2 in the morning. Some of us can be up. If y'all in the West Coast, California area, Washington area, state, this is a perfect time for y'all to trade because it's a decent time. At night, it's not too late, but over here in the East Coast, in the Central Time, it's kind of late for us. But it goes up, take out buy side liquidity, they hold it, and then when it drops down, it takes out the sell side liquidity. Look at these lows in here. See these lows? Takes out the sell side. Right? So many moves, right? You only need 1 per day. That's the point. Like 1 good setup per day can change your life. Let's go back out to the 1 hour. Go back out to the 1 hour. So yeah, that was just Tuesday of the week. So what happened on for example, let me show you. Right here. No, my bad. Right here. So on Tuesday, right, it sold down eventually later in the day. I want to say overnight in the PM session, they sold it off. Or in the afternoon, they sold it off. And they took out Monday's low right there. Again, what do you think smart money is doing underneath that low right there? Make sure y'all subscribe over here on YouTube. Right, subscribe. If y'all want to get in the Discord, the link is in the chat. The link is in the chat. How many people on X? 40 people on X, 20 people on YouTube. So we're starting to balance out a little bit. Make sure y'all subscribe, share the video, share the link, description, all that. Right, going over technical analysis live. So what do you think is underneath this low right here from Monday, right? Underneath that low, there's orders pending. That's why they're getting the best entries. So if I just zoom down to like a 1 minute right here, still on Tuesday afternoon, many trade setups that can repeat over and over again. It's an algorithm. But yeah, this was a manipulation day right here. They just boom, 4 o'clock, send it higher. They got in. We couldn't get in on that. Right? But they send it higher, and when they send it higher, they take out what? Buy side liquidity. See that high right there? They target it. That's not random. But look to the left. Let's drag that out all the way to the left. You see that? You see these highs in here? Those are where they left behind orders in the market They go up, they clear out all this liquidity up here, right? Above all these swing highs, there's a lot of liquidity. They clear it out, right? And then it retraces back down into the range, hits the midpoint of the new week opening gap. And then from there, they just continue to send it higher, eventually going to take out the buy side liquidity and continuing to push the market even higher, right? That was just Tuesday. That was just on a Tuesday. Now, I'm not going to go through every day of last week, but I'm just showing you, giving you examples of how the markets are not random. They're coded. And with that information, you can learn this skill set. Excuse me. With that information, you can learn this skill set and take it, do whatever you want with it, right? Nobody can stop you. Once you learn this, there's no going back. You've been red pilled, right? So look, this was Wednesday. So clearly Wednesday was very bullish. But then on Thursday, what do they do? Above liquidity. They take out the high, go down to the 1 minute on Thursday. Nice sell-off on Thursday. Nice sell-off. I want to say that was during lunch on Thursday, lunch hour or the lunch session, right? We break this down into sessions. There's many times throughout the day that you can trade. First thing that pops out to me after taking out liquidity, look, see these lows in here? You already know what's underneath those lows. You should already know what's underneath those lows. They have something called a float. They build in the float. They engineer both sides of the market. They have to do this, right? That's how they have control. There's no such thing as a free market. And look, they come back down, take out the lows in the market where the orders are, pending orders. See this low right here? You can't make this up. And this low right here. All liquidity pools, all targets, they come back, they take it out. They send you home crying because, you know what I'm saying? They send you home crying. If you ever been in a trade, right? Live trade. Let me show y'all again. Let me come back over here. If you ever been in a live trade, come back to my X. If you've ever been in a live trade, right? This is how it feels, right? When you first start off and you're using real money. This is how it feels when you first start off and you're using real money. You know what I'm saying? It gets real. Your nervous system get to acting up. You start stressing out, right? This is how it feels. So y'all know. And if you over leverage, if you put too much money on the trade, if you don't use proper risk management and you think I'm just going to go all out, you gonna have these symptoms right here that this dog has. So I'm just letting y'all know. Shit is serious when it comes to it's serious when you're first learning and you don't know what you're doing, right? You go through those symptoms. But over time you become numb and all that shit go away. You gotta get some, scars right quick. You gotta blow some money, you gotta get hurt a little bit. That's part of it. Everybody that pursues this gets fucked up in the beginning. But over time, you stick with it. Quitters fail. If you never quit, you're eventually going to become, you know what I'm saying? Let me show you again. If you never quit, you're going to become the one, right? You're going to become the one when you decode the markets, right? It's going to slow down for you. You're not going to be shaking no more. Shit is going to just start making sense. And for me right now, with my experience, this shit has slowed down. It makes so much sense that they can't hide the script no more. They can't hide the script. So look, you see how I frame up these lows and whatnot? We go up, take out the previous day high from Wednesday. Again, up here, smart money reversal. They're getting in at the most premium side. Trump and them, they're getting in at these positions up here, right? And then it drops down and it retraces up. Shep, PTSD. Post-traumatic trade disorder. Yeah, I'm gonna have to start using that one, Shep. I'm gonna give you credit for it though. PTTD, post-traumatic trade disorder. It gets real if you ever use real money, but it's gonna go numb. You gotta get fucked up eventually, right? And then it slows down, like I said. But look, we take out buy side liquidity, and you got to see this over and over again. You got to see so much of this that it just slows down. Okay, my bad. It slows down. So look, when it drops, what is this right here, right? What is this? What is this right here? Trades right into it. SIBI breaks down again. Also, if you missed the SIBI, don't panic. Look to the left. Keep looking at your PD arrays, right? You got consecutive up close candles. These are order blocks. So let's say you missed the SIBI. There goes your order block entry right there. You can't, it won't leave you. It trades down. What if you missed that one right there? Let me label this. What if you missed the order block? Well, guess what? They're going to give you a propulsion block. Look, right here. See? Propulsion block. So it trades up, drops, and this candle right here, let's zoom in, this candle right here, opens, trades right into the order block right here. Right? If I put a Fibonacci on these two down up close candles, from here to here, right? You tell me, right? You tell me, zoom in a little bit. You tell me if this is freaking random. You're not going to be able to see it in the beginning, but you got to spend a lot of time with this. So what I'm doing is I'm combining these two up close candles. They're one order block. And then I'm pulling a Fibonacci to determine the midpoint of both of these up close candles. And you tell me this candle right here, the last candle before it leaves and goes lower. It opens right here. It trades up. So at one point, this candle was green, and you're going to be shorting while the market is coming up. That might sound confusing, but that's what you're doing. It goes up and it tags the 50% level of the bearish order block. Bing. Is that random? Come on, man. Is that not coded? Is that not algorithmic? Are you not entertained, right? Are you not entertained? Can you not see it? Do I got to give you more red pills? Look at this right here. You cannot make that up right there. The 50% level, those two up close candles. And then what does it do? It leaves. At what time? During the macro. You can't make this up. You can't make this up. Make sure y'all subscribe, hit that like button. And then when it leaves, you might think, oh shit, it's left me. No. They keep leaving behind inefficiencies in the market. Look at this right here. They're leaving behind inefficient price action in the market. What is this right there? Bing, just like that. Shout out to you, Jay Manson. Trades right into the SIBI. It gives you another opportunity to get in. And when it gives you another opportunity to get in, you're in. Once you're in, you're in. Now, you might have to sit through some bullshit sometimes, and that just comes with it. Guess what? It refers right back to that SIBI right there. See? You just got to have an understanding what the higher time frame is doing. But look, it refers right back to that SIBI. When it refers back to that SIBI, they leave behind liquidity. See that? Sell side liquidity. SIBI, drop down, tag the liquidity. And then look, see all these equal lows over here? Come clear it out. Money printer, right? Money printer. Just turn on the money printer, just like that. That's what the algorithm is doing. Money printer, taking out all these lows, right? Market maker sell model. We just on Thursday of the week of last week. Market maker sell model takes out liquidity. They buy it back at discount, not random. And then they send it back up higher because overall, even though the market, first of all, people that analyze the markets from a, long-term perspective, you might not realize this type of price action short in the market is going on in intraday, right? When you zoom out and say, damn, the stock market bullish as hell, you're not even realizing this type of shit is going on in a bullish condition, in a bull market. It's probably like upside down for some people. Like some people might not understand that yeah, I'm buying and selling in a bullish market, right? Shorting this market from this SIBI down to this low right here, 434 points. You only need a percentage of that. You only need a quarter of that right there. And you can retire at some point in your life. You won't have to work a job if you can just get a half of the 434 points, right? Let's pull out the calculator again, just to put it in perspective with one contract. Make sure y'all hit that like button. Got 42 people on X, 20 people on YouTube. Y'all both cross-platform. If you ain't follow me on one, follow me on the other. Help a brother out, right? Subscribe, like, follow, subscribe, share, whatever. Help a brother out. Very organic. This is what y'all want to see. I like X, man. I'm starting to like X a little bit. Shout out to you, AWB. Let's see. 400. Lenny, 134 and Pete. Yes, Lenny, you got 35 point piece of that. Yep. I remember, Lenny, last Thursday. You didn't need the whole thing. You just need a piece of it. Because let's break it down. Let's pull the calculator out again. Let me pull out the handy dandy calculator. I had Claude AI build me a calculator using code, and I'm using it. So So I think it's interesting. So yeah, I got a calculator on my live stream now because we got to do the math, right? Got to keep y'all fresh and put it in perspective. So that sell-off was 434 points. Let's go ahead and round off to 435. Let's see what one mini contract would be with a 435 point sell-off. And I'm going to put the time to it to show y'all how long it took. But 20 times 435, that's one mini contract of the NASDAQ. $8,700. All right, $8,700. What does that look like as far as time-wise? Well, if you would have entered, let's say, let's give you right here. If you would have entered inside of this SIBI and held it down to, let's say, the low of the order, the new week opening gap right here, that would have taken you 1 hour and 9 minutes. 1 hour and 9 minutes, right? And it's not the full thing. Of course, you're not going to get the full thing, but I'm just using the new week opening gap as a take profit level, which is, let's say 365. So let's redo the math. Let's redo the math. 20 times 365, 7,300, right? So this entry, 1 hour, 9 minutes, $7,300. What would that be if you traded a micro? So you take 20 times, 2, because micros are smaller than minis, 2 times 365, $730 in 1 hour and 9 minutes. Y'all gonna complain about making $730 in 1 hour? Not me. Shit, you know how many people don't make that a week? $735 in 1 hour. So put it in perspective. Make sure y'all subscribe on YouTube. Y'all subscribe, hit that like button. So it goes down, takes out that profit. That happens during the lunch hour, going into the PM session. It's done after that. Nice sell-off. Congratulations. You're done for the week if you choose. That's just on a Thursday. And then check this out. Market closes on Friday. Thursday. It closes around 5 o'clock. It gaps right back open. So there's like an hour close in the market every day. But it gaps open and then it just leaves, right? It doesn't even come back. Go back out to the 1 hour. So I'm showing y'all the different type of moves that happen all day, every day in the markets. You know what I'm saying? All day, every day. So in these extreme bullish price discovery conditions, you could be shorting the market in this extreme bullishness, right? The best setups were going short, even though the market keeps marching higher. So it doesn't matter which way you trade. You just pick a side and trade it, right? Pick a side and trade it. You just gotta know what you're doing. Let me drag that out right there. But yeah, that's the stock market. That's just some high frequency shit that's going on. Let's look at the 1 hour, for example, right here on Friday. This was Friday. Friday opened up, went higher, rallied up, and then it retraced. When it retraced, it offered you a entry right there. That's a 1 hour fair value gap. Zoomed out. We're not on the 1 minute. This is a different style of trading. This is more short-term day trading style of trading, and it retraces down into the order block. The fair value gap during the market open at 9 o'clock. Let's go down to the 15 minute. Matter of fact, let's go down to the 1 minute. The market opens at 9:30. For y'all didn't know, on Monday. The market opens at 9:30. There's something called an opening range from 9:30 to 10 a.m. 9:30 to 10 a.m. Let me show you some other shit. All right, 9:30 to 10 a.m. between these two trend lines right here. This is a model as well, right? Even though nothing was clean on this opening range right here, but this is still a model that you can use. So what happens? Prior to 9:30, this is pre-session. Market opens at 9:30, which is this white vertical trend line. And the opening range is for 30 minutes, 9:30 to 10. So in the first 30 minutes, it goes higher, right? And when it goes higher, this swing high right here, down to this swing low right there. That's a Dillon range, right? It goes up into a premium because it's reaching for something. What is it reaching for? It's reaching for this pink shaded area right there. That's that 1 hour fair value gap. So it's bearish trying to reach for that 1 hour fair value gap or BISI. Right. And then look, these equal lows right here, that's sell side liquidity right there. That's a target. They're buying underneath lows while trading inside the 1 hour BISI. When it rallies up at a premium at the market open, this is a 30-minute window. It rallies higher. Let's zoom in a little closer, right? Now, for us that use the first presented, I'm not going to use that here, right? I'm not going to show y'all, tell y'all about the first presented. But there's other ways to get in this. It's not just first presented. But look, it trades up, trades right into that SIBI right there. Sell side imbalance at a premium, buy side inefficiency. Look, bearish order block as well. You can also use that as well as the entry. Bearish order block. So it trades into that. Normally at the 9:30 open, it's very volatile, very high resistance. But let's just hypothetically say we use these for entries to short down right here, right? How long did that take? Let's say we entered at the SIBI right here, and we get out at these lows right here inside that 1 hour fair value gap. That took 12 minutes. That is 80. Let's go ahead and round off. Matter of fact, let's do this. Let's do this. Let's do this. From entry right here, we're going to go to 100 points. Entry to 100 points right there. Right there. Right. All right. That took 13 minutes. 13 minutes, 100 points. 13 minutes, 100 points. Wait. Yeah, y'all can see. Now let's utilize the calculator. In 13 minutes, 100 points. It can be subjective. Everybody's situation is different as far as capital. But I can use the smallest leverage up to the most extreme leverage, right? It's all subjective. Everybody's situation is different. But let's just say one mini times 100 points, $2,000 in 13 minutes. Come on now. $2,000 in 13 minutes. You want to get real crazy? Use somebody with $1 million in capital. Let's say 5 minis, right? 5 minis, which would be 20 times 100 times 5. That's $10,000 in 13 minutes. $10,000 in 13 minutes. Yes, there's people that's doing that, right? $10,000, 13-minute trade. This is what kind of trade would this be considered? Y'all let me know in the chat. What kind of trade would this be considered? What kind of trade would this be considered? Is this a day trade? Is this a swing trade? What kind of trade is this? Jay Manson, swing, Shep, scalp. Jay Manson, you sure it's a swing trade? It's 13 minutes, bro. 13 minutes. 13-minute trade setup. If you somebody, check it out. If you somebody who could squeeze this in the morning, let's say you somebody work at an office, somebody that work at a, what's up, Fear None, you 5J. You say it's a day trade. It's not necessarily a day trade. A day trade is when you enter a position and pretty much hold it throughout the entire day for the daily range. What does that look like? What does that look like? Look over on the right side of my screen. If I go out to the daily. So what is a day trade considered? Let's just say you enter a trade and you hold it for the entire day and you get out probably about the afternoon before 4 o'clock. Normally 2 to 4 o'clock, you get out the market, right? So you buy it and hold it, but that's not what this is right here. This type of trade is 13 minutes, right? A day trade, you might be holding it for 6-7 hours, but this type of trade is a scalp. This is a scalping entry. You get in, 13 minutes later, you're out. That's a quick in and out scalp, just like that, right? In and out the market. With scalping, first of all, there's no one way to do this, right? There's many ways to skin a cat. I got like 15 different trading models, probably more. I probably got like 18, 19 different trading models that I can utilize at one time, any given time, right? Just like how Trump got like his sharpshooters and all the people around him and shit, and they pop out at any time. That's how I feel about my trading. I can use all my weapons, right? I got many weapons that I can utilize at any given time. And this is one way to do it. Now watch this. I'm gonna show you. This is a scalp, 13 minutes, right? 13 minutes. Where is this scalp trading down to? I already gave it to y'all. This short that I'm showing you, that's a scalp. What is it trading down into? What is it trading down into? Make sure y'all hit that like button, subscribe, y'all. Subscribe. If you're on X, subscribe. If you're on YouTube, subscribe. Y'all come over cross-platform. What is this short setup, which is a scalp? What is it trading down into? Y'all let me know in the chat. Supply zone? No. Now, check this out. I don't use indicators. I don't use supply and demand. Don't let that discourage you, or kind of like, don't let it come off as like, that shit don't work or nothing. I use a completely different perspective. You can see the title of the live stream. The markets aren't random, they're coded. So I have a philosophy of the markers are algorithmic and they're coded, right? That's my philosophy. That doesn't underestimate any other style of trading. But if they're coded, I'm viewing it from a different perspective. So what I'm trying to show y'all is, okay, the market sells down into this pink shaded area. Do you remember what I showed you on the 1 hour? Let's go back out to the 1 hour time frame. On the 1 hour time frame on Friday, right? Didn't I highlight this BISI, right? I'm showing you a scalp down into this BISI that's going to act as support to send the market back up higher. But you can get in here and scalp it down into that and then accumulate it and buy it back. But I'm just highlighting that. I'm just showing you that, hey, even in this extreme bullish condition, there's moves that you can take to get in and get out the market. 13 minutes trade setup. I put the numbers in front of you, what that looks like. Trades down into this fair value gap, which is a BISI. It acts as support and then it goes higher. Back down to the 1 minute time frame. What does that trade setup look like trading down into that BISI? Well, here it is right here. In the first 30 minutes of the market being open, I'm showing you a trade setup that's going to trade right down into that level. It's not random. Price is coded on time first, right? I might be showing you fair value gaps. I might be showing you liquidity. I might be showing you all these different levels. But one of the elements that y'all don't understand and cannot see is time. Time in the market. But they tell you you can't time the market. There's no way you can time the market. Bullshit. The markets are coded on time. So if you're waiting for a specific time of the day, 9:30 in the morning to 10 o'clock in the morning, that's the first 30 minutes of the market being open. It opens up at 9:30 right here. It retraces higher into a premium, taps the SIBI, and it sells off in the first 30 minutes of the market open. They go down, take out liquidity. Yes, you can short that, take profit, be done for the week, be done for the day. You don't have to get this, right? That short right there, you don't have to be in this large move back up higher. You don't need it. You can make just as much money shorting this down compared to going long with it, even though the markets are bullish. You know what I see? I see a whole different model just sitting here looking at this, right? Do you see this swing high right here down to the swing low, down into the 1 hour fair value gap? What kind of model is this? Y'all know, y'all should know. If you're brand new, I don't expect you to know. But what kind of model is this sell-off, right? It's an algorithmic principle. It's coded to do same functions. What kind of model is that? Make sure y'all hit that like button, subscribe. I'm not getting no subscribers on YouTube. I don't know what's going on. I ain't even get subscribers on X. Share the live stream, share the video, subscribe, do something. People watching but not subscribing. Shep, yes, market maker sell model, AWB, market maker sell model, right? It's a sell program that the market is scripted to do. Market maker sell model, and it trades down, going short. They hit key level, and then it flips it into a market maker buy model, right? Those are two different models right there. Two different models. You can be a short sell in the sell model, hits key level on the higher time frame, and then it goes into a market maker buy model where you can be long, right? I just showed you a section of the sell model. You see the sell model? It started up here. Look at this swing high right here, down to the swing low right there, right? That's a range. It doesn't go up into the premium. So that just shows you very bearish, very bearish. It can get even more fractal. Zoom in, right? Swing high, swing low. That's another range. Let's highlight that range. Swing high, swing low. Goes into premium. Goes into the premium. Look to the left, SIBI. Sell side imbalance, buy side inefficiency. Trades right into it. Bing, another short entry. Sell off. What does it attack? Liquidity. Another scalp. You get in, get out. Right? This is all on one day on Friday. Get in, get out the market, right? Tags it. It keeps going a little bit deeper. But let's just say you enter from right here, SIBI, down to that low right there. That's a 37, 38, 40 point run. You can make an entire living. Matter of fact, 40 points. Y'all come over on YouTube. I got a lesson. Y'all come over on YouTube. I talk specifically about this right here. Trade.
Are getting divorced.
What the hell?
Compared to people who are getting married.
Wait. 1 second.
People more.
All right, y'all. I don't know what the hell happened, but TikTok got a surveillance system on me, but it is what it is. It's all good. Damn, that threw me off right quick. Where was I at? Where's my NQ chart? Where's my NQ chart? Right there. All right, so just lost my train of thought. All right, so right here, right, another setup, 40 points. And what I was getting at was right here, trade around your 9 to 5, earn 40 points before work or earn 40 points per day. 40 points is very easy to do for somebody who's brand new, right? You just gotta train a little bit, practice a little bit. 40 points a day, you can start working to replacing your income, replacing your job. To keep your job, I'm always a fan of promoting like keep your income. That's like having a job in 2026 is a gold mine, right? Don't quit your job. And if you need a job, go look for a job. And also put your time and energy into learning this craft and skill. And I talk about 40 points per day, right? And that's what this looks like back over here on NQ. Back on NQ, this is a 40-point sell-off right here. Boom. Put it in perspective. Just put it in perspective. I still got the calculator up. The calculator might be distracting, but if we put it in perspective, let's just say you take one mini. We're going to add 5 minis, right? 5 minis. 20 times 40, which is $800 times 5, which is 5 contracts. That's $4,000, just like that. $4,000 trade in one day. You can stop your week. You don't need nothing else. You don't have to do nothing else. Let's say you enter right here. It comes down. 40 points right there. That happens in 10 minutes. Imagine making $4,000 in 10 minutes. You see what I'm saying? Scalp. That's a scalp trade. Also, it comes back up, trades into the SIBI, right? Gives you another entry right there. Start looking to the left. Almost right there. But anyway, let's just say this. Let's say it trades up, offers you a SIBI entry, trades down, boom, 60, 70 point trade. Or you can simply aim for another 40 to 50 points. Let's say 50 points right there out the market, right? You don't always have to aim for liquidity. You don't always have to aim for fair value gap. You can just aim for points, get your points, consistency, get out the market, right? It's different ways to be profitable. You don't have to just remain, there's many ways to be profitable. Look, all of this was on Friday, shorting the market down. And then when it goes back up because they don't want you in, do you see the difference in the sell model compared to the buy model? The sell model was a little high resistance, but it was cleaner, right? But when it comes down, here's a key level. They don't want you in on this. And look how high resistance the buy model is. They are compressing price, barcoding, and keeping you from getting in, right? They want to wick you out. You can still trade in these conditions. For example, Every time it retraces, start looking at the order block. See these two down closed candles? That's one order block. Trades right down into it. Boom, expands higher. This candle right here, a bullish order block. It trades up, trades down into it. Entry, expands higher. Look at these 3 down closed candles right here. Bullish order block. Let me hide the calculator. Bullish order block right there. Entry goes up. So the move higher was high resistance. Pretty much. The move higher is high resistance. But yeah, man, that was on Friday. So let's go back out to the hourly. And all I'm trying to show you is there's dozens and dozens, if not hundreds of trades per week that you can take advantage of. And when you learn this skill set, you kind of get out of that mindset of let me hold long term, because the markets are going to continue to do what they do. There's dozens of profitable setups every day. There's hundreds every week. You just gotta know what you're looking for, right? You just gotta know how to read price. You gotta understand what it's doing. Who's on X? I'm not gonna keep y'all too much longer. I'm about to wrap it up. About to wrap this up. But y'all press 1 if y'all enjoyed this, man. Y'all press 1 if y'all enjoyed this. I pretty much enjoyed this. If y'all on X, make sure y'all I've been on here for a while, but definitely reshare the live stream. If you're on YouTube, reshare. If y'all want to come over here and subscribe to me on, first of all, if y'all want to join the Discord, it's on X. The link is in my description. It's only going to be temporary. I'm letting a few people in. If y'all want to get in, y'all come over and get in. But other than that, man, I appreciate my new subscribers, right? If you haven't subscribed, subscribe. I'll probably do a part 2 tomorrow. I wanted to get into more markets because this goes on. Hopefully this one was more technical. Just me trying to show y'all how markets are coded. Would y'all agree the markets are coded or not? Y'all let me know in the chat. Are the markets coded or are they not? Is there something going on? And guess what? These moves are happening before the news even come out. We can kind of anticipate events before they even happen by understanding how to read the markets. Night Owl, we waiting on you, Shep. Yep. So we can see these moves and anticipate them before they even happen. It's a gift from the guys, right? It's a gift from the guys. I'm here to teach y'all how to do it. So if y'all want to subscribe, sign up, whatever, share the live stream, do what y'all need to do. But I'm gonna keep it short for right now. Hopefully y'all learn, because I showed y'all different models. I went over different concepts. So y'all can really go back and learn. I taught y'all different things to use, different tools. Very basic, foundational. So go back and learn what I taught y'all, right? And watch this over again, because if you're somebody brand new, I give you a foundation for free. Some of this information I charge for, right? So y'all take it for what it is and learn or whatever. But I appreciate y'all time. I've been running too long. I need some water because I've been going. So I'm gonna go get hydrated. I'm gonna on Sunday evenings, I like to refresh for the market for the week, kind of get locked in. Might be a little too late for y'all in the Discord. So if not, we'll be in there tomorrow. I know some of y'all got to go to work, but I appreciate y'all time, and I'll get back with y'all on the next one. Peace out.